All right, let's get everything started here. If you're already in chat over there, if you just let me know that you can hear me and I'm coming through clear. Looks like we have video and audio looking good. All right, excellent. Looks good. Welcome back to the channel. Sorry for the last minute change of plans. Hopefully people can still make it tonight. I did not mean to switch it up, but I had a previous engagement. I basically slipped my mind, so I figured I would just do an impromptu stream tonight instead. And then obviously we've had quite a bit of market volatility, so it's probably not a bad idea anyway. So if you're new to the channel, check it out. We're going to do quite a bit of technical analysis today on everything from cryptocurrencies, traditional markets like stocks. We're going to do tech sector, going to do commodities, pretty much anything you can think of. So, and if you have any suggestions, recommendations, or requests, please let me know as well, as I'm more than willing to look at those. So if you can hear me good, just leave me a little comment or just give me a thumbs up in the chat, please. All right, great. So welcome back to the channel, Crypto Trend Trader, with a mid-market update, mid-week market update. This is not financial advice. I am not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. These markets can be dangerous, and obviously there's quite a bit of volatility right now. So make sure that you are protecting your capital first and foremost. So we're going to just start over here with, I'm going to look at the 10-year and DXY dollar, and then I'll just do the indexes real quick. SPY, Dow Jones, NASDAQ, Russell 2000, and then we'll check out the energy and clean energy, and then we'll go into cryptos, and then work our way through basically either tech sector next, or we will do commodities, either one. Excellent. Thank you, brother. Appreciate that. But most importantly, though, I do want to just jump over to crypto real quick and just do like a quick look before we get rolling with everything. Hell yeah, man. Thanks for joining us. It's been a while. Good to see you. So basically, looking at Bitcoin right now, this is exactly what we were talking about. Basically, danger zone. We had shown weakness after we got that close below the 821. We got that powerful pushback up today to attempt to cross them back to the upside, and a very, very strong rejection, which resulted in a massive bearish engulfing candle that has like just closed in the last couple minutes. So exactly like I said, I would expect us to, I mean, at this point in time, it's obvious that we're coming back down to 50,947 or 49,412. We're going to come down here and test the 50 simple or the 50 exponential, these two green moving averages right here. At which point in time, I would expect us to get a reflex rally one way or the other. It's possible we test back up first, but I feel like we tried to test back up and that was our big failure. So now we're going to confirm that cross. But I would expect this candle more likely than not to at least come up on a wick back to like 54,209. So this is a pretty big range here. Basically like 49.2 to 4,000. So like 49,000 to 54,000, we got about a $5,000 range, 10% move. So I'll be looking to enter additional short positions off of the cross at the resistance up here. And then I'll be looking to enter like scalp long positions, off the support at the bottom right here. And then we'll play it by ear. Let's look at our previous time that this happened. That was when we sold off from the all-time high at 41,800. Down to the 50 and 55, the two green moving averages. First time we came down, we touched them at 28,700. Second time we came down slightly lower on a close, but slightly higher on a wick. Same area, like 29,000. We did confirm the cross to the downside, but again, that 821 was able to be saved. We pushed back up and we saved it and continued to the upside where we put in our all-time high. First this one at 58,000 and now here at 62,000. But, we obviously saw the bearish divergence was developing on multiple time frames. We had the bearish divergence on the daily, triple bearish divergence on all of our indicator oscillators, and then also on the weekly as well. So this was a very clear and obvious move that was getting ready to happen. We basically laid it out in the previous live stream. So if you didn't watch that, go ahead and check out the Bitcoin and, basically any of the TA in that video. And you can see I literally called all this out to the T. So yeah, I'm going to jump back over to our traditional stuff, and then I'll work our way back around to crypto. So yeah, we're going to start over here the way we always do and take a look at the 10-year treasury. Exactly what I said happened. We came up here, topped out at like 1.76, and now we're just chopping around in this range. I would expect us to continue chopping around in between these two key Fibonacci levels in yellow here, the 1.45 on the treasury yield and 2.08. Basically just chopping around in that range. We have quite a bit of support turned resistance in that range. We have now broken into that range between the 618 and the 786. So I would expect that there's all through this range is going to be resistance and support. So we would just like basically be going sideways here, bouncing off like the trend line as we go. But eventually I think we will be creeping up to 2.07. Obviously, once again, we've called this out the entire way up. We were paying attention to the 10-year treasury yields before anybody else, has been watching them, and probably before most people even knew what it was. Now we have the DXY dollar index. Obviously, same type of deal. Nobody was really paying attention to the dollar, nor its relevance. Everybody was talking about how the dollar was going to zero, but we have been watching this entire time through the channel from March last year when it shot up and put in that massive move as the markets crashed. And now here we are 1 year later. We have broken out of that descending 1 year long trend line there. I'm going to turn off the moving averages for a moment. And now here we've broken out of the channel to the upside, came back down. Everyone said it was going to be a failed breakout. It obviously was not. We found support, broke through, retested for support, and got continuation confirmation, at which point in time we had put in a low, we had put in a second low, we had put in a high right here, we had put in a second high right here, and now we're coming back up to the top of the range. When this sold off, now you'll see we've started to develop essentially an ascending broadening wedge. A wedge, it's getting bigger, like wider, as it goes upwards, and this is the exact signature that we had called out ahead of time. Not only that, but when we came back up to the top of this wedge for the third time right here, I specifically said what I was expecting to happen was a violent sell-off back to the heart line here in white, this dotted line, find support on that heart line, and then a push back up to the upside. And when we get back to the top right here, to the upside at about 93, if we consolidate there long enough, I would expect this to break out and continue on towards our next measure move. But two important things to note. When a channel like this breaks or a pattern like this breaks, it almost always comes from the bottom to the top and then finds support at the midline, at the heart line of the channel, and then comes back to the top and breaks through. Inversely, same thing on the bottom. A lot of times when it breaks to the downside, it will come to the top, then it will come all the way to the bottom, then come back to the heart line, and then come back to the bottom again and then break. So in this case, we were expecting this potential move to find support at the heart line, move back up to the top of the pattern, and get our potential breakthrough. Now, multiple important things are happening. We've obviously established an uptrend with our series of higher lows and higher highs inside of a macro downtrend. So this is essentially a relief rally right now what's taking place of this pattern. The measured move of the pattern itself is this green arrow right there. So what we would expect to happen is when a pattern like this breaks, we get the measured move, which is going to eventually take us back up to like 95.66 on the dollar. Now keep in mind, this is not just the dollar in relation to other assets. This is the dollar in relation to 6 other currencies with different weights, primarily the euro. So this is the strength of the dollar in the relation to the euro and these other currencies, not in relation to all other assets. But while we see strength in the dollar, we will typically see weakness in these assets. So that's what we're paying attention to. I'm now going to turn on the moving averages and turn off the drawing tools, and you'll see we have hit our target. This was our next target in line here, exactly like I said. We were expecting to get rejected on the 89, rejected on the 89, burst through the 89, come slightly short. We get the front run of the 200 exponential and 200 simple, find support now on the 89, and now here we've come up and tagged the 200 simple perfectly. We could get a tiny little burst back up just slightly higher, or a wick rejection up slightly higher above like the 92.67 range. But at this point in time, we've hit our next main target. I would expect us to come back down to the bottom of the range to find support once again, consolidate, and then get continuation. But like I said, with the drawing tool in place as well, we could easily come back down to the heart line of the channel and then break through, or we could get a powerful breakout right now. But regardless, what I want to see is a consolidation outside of the range once it breaks, retest the broken resistance as support, and then get our continuation, basically confirmation of the move and its strength. So that's what we're paying attention to. Welcome to everybody that's showing up. Appreciate you guys. Sorry about the last minute change of plans. So yeah, we're going to get back to crypto here shortly, but I'm going to run through all the indexes. I know everybody was extremely bullish, and we're talking about how the market space was broadening and all this stimulus was going to pump everything up. Exactly what I said happened. Waited till all the stimulus hit the markets, till the majority of the people got their stimulus checks, and we have seen only weakness and dumps coming in since then. So if we go over to the SPY S&P 500, you'll notice that, and I'm going to go kind of quick through this because I basically do this at the start of every video. But just a reminder, or for those that are just showing up, this is our massive channel that we are inside of. The red is the resistance, the blue is the support. This channel goes back to 2009. So we're talking about like a 12-year-old pattern that we've been inside of. We have come out of the top of the channel a couple times, consolidated above it. We have broken out the bottom of the channel a couple times along the way, including our most notable break in March, but we came back inside the channel. We are now at the red at the top of the channel. So the most likely thing to happen when you're inside of a long pattern like this is for you to continue inside of the pattern until we finally get a break confirmation and then continuation. So in this case, the most likely thing to happen inside of a 12-year pattern is us to stay inside of the 12-year pattern. So you'll see I have a couple of Fibonacci's in place. The one from the all the way bottom back here all the way up to the top is the most notable, but the least likely to be relevant at this time. And then we have our green Fibonacci, which was the previous high. And then we have inside of that smaller area now, we have a Fibonacci from the March breakdown right here, the 1 year ago breakdown. That's our blue Fibonacci in place up to the all-time high here, which we were like just at basically. Matter of fact, let me just adjust that slightly to the all-time high at the top of the channel here. And you'll see now we have bounced off of the top of the channel, bounced off the top of the channel again, but we're putting in slightly higher highs. But now here we are at the bottom of this smaller pattern inside of it. So we have a blue trend line going from the bottom here that we have basically broken outside of after like a consolidation and quite a few tests there. And then we have a green one, which just ignores like the little parabolic beginning here, but it has a touchback here, a touchback here, a small break outside of it. And then we found support, came back in, a clear touch here, a clear touch here, a breakdown, which looked like we were going to break out of the pattern, but then we came back inside of it. And then one more time, we came back down to it and found support. So this is obviously a very important trend line taking place here. And now here, once again, we have closed outside of it again. So this previous one was a fake out, or we ended up finding support after like initial weakness, but it looks very likely that we're going to get now the break and continuation of this pattern. And breaking this shorter term 1 year pattern, like this little ascending wedge that we're inside of, will just give us a measured move depending on which one of these you look at. Like a regular measured move, either in red or in purple here, would just take us down to basically like the bottom of the channel, maybe slightly outside of it. So we can break through this short term 1 year pattern and come down inside of our long term like 12-year pattern. And that's the most likely thing to happen to me, because we stay inside the long-term pattern, but we get the measured move and the move of the shorter-term pattern. We also can come down here to our key fib levels. We have from this previous like small little consolidation at $319 to our top here. We already came down to the 236, but then put in a slightly higher high. So we could easily just come up here basically back down to that. Our first target is $378. Next target is $366. That kind of lines up with some of our important moving averages as well. So we'll pay attention to see, essentially how that all works out here. But at this point in time, we are below the 21 moving average, just about at the 50-55 and about to get the 821 cross to the downside in line with this break of the pattern. We are exiting the bullish control zone. We have gotten rejected for like basically the second time at this negative slope line on the TJD, TDMACD, put in multiple stabs of bearish divergence. So at this point in time, I would expect a sell-off like we've been anticipating. And I think it's probably going to get pretty violent I would anticipate at least a move down to the 200 moving average. But again, if we come all the way down to the bottom of that pattern without breaking through, we could go as low as like $300, over 20-25% move to the downside. So that's what I'm anticipating, and everything's playing out according to plan. So Dow Jones is next. Once again, we can just kind of zoom out on this thing, and I will show you the importance of this pattern that we're paying attention to. If we go back here, our previous top was in August, and then our bottom was down here in May, and this goes back to 1920, what is that, 9, and then our bottom was down here in 1932. So we're talking about basically a 100-year pattern. Once again, this channel that we've been operating inside of, we have multiple tests on the bottom, we have multiple tests on the top, and again, we are here at the very top of this pattern that's like 100 years old. So we have slightly broken out of the top of the pattern. Inside of that larger pattern, we have a red resistance line. I'm going to go to a shorter time frame so this lines up a little bit better. This is our weekly now. From our, and the purple is obviously that long trending line, and the green is the long trending line on the bottom. So you'll see that where we are now, we have multiple touches on this red, basically a broadening wedge. We broke out of it slightly. I told you I wanted to see us come back down and test it for support, and that's exactly what we've done. We're almost back at it for support, so we want to see how this weekly closes, how this monthly closes, and basically see, are we going to confirm this breakout and get continuation, or more likely than not, are we going to just come down basically from the top of the pattern to the bottom of the pattern? Because this shorter term broadening wedge that we're inside of goes back to 2018, as where like this massive channel that we're inside of is, like 90 years old. So the likelihood of breaking through like a 90-year-old pattern is not that likely, as where like a few-year-old pattern is much more likely. So I would expect us to basically break back inside this. Now it is notable that each time we put in a high, we put in a higher high, we put in a higher high, we put in a low, we put in a lower low. So the likelihood that if we do stay inside this channel and come back down, that we would at least come back down to the bottom of the pattern and potentially even put in a lower low, which would be anywhere from like the $20,000 to $16,000 range. And depending how long you've been following the channel for, I'm going to make a couple notes here. One, all these indicators that I use in these videos are like essentially created by me and offered for free on TradingView. There is a list of them in the description. Highly recommend that you use them. This one is bunch of moving averages. We have modified stochastics and proprietary indicator, the knife. And then we also have our TJD Traders Dynamic MACD as well. Highly recommend all these indicators. They are phenomenal and easy to use and understand. I also have the indicator series, which specifically explains like how to use them and the purpose of them. So moving averages are the best and most efficient way to trade these markets, as well as like momentum indicators or oscillators. I like the MACD and stochastics as well. And then obviously we have a couple other like things incorporated, like our binary pivots and parabolic SAR, etc. So highly recommend them. If you haven't checked them out already, highly recommend that. Also, go back to when I started this channel, a little over a year ago. I actually specifically told everyone about this move prior to it happening. Not like 10 years prior to it happening, not 5 years or 1 year. I told people this move was going to happen a couple months prior rather, and I literally laid out the exact targets on the Dow Jones and the S&P 500 within 1%. I was correct on the dumps on both these indexes within 1%, within a couple months of the actual sell-off. So highly recommend you check that out, and you can see the accuracy and efficiency of my trading methods, and essentially give you a little bit of credibility if you're new to the channel. So switching over now to the IXIC. Oh, and essentially the same thing. We're just looking to come down here and like test some of these like important areas, but we have broken down from the 8. We have flipped the parabolic SAR over red. I would expect us to come down at the absolute minimum to the top of the channel, 32,152, but I'm expecting a break back inside of this range. We're getting ready to exit the bullish control zone. We're getting ready to cross the blue and purple to the downside, get the hard sell. We also have multiple red histograms, so I would expect to sell off, find some support along the way, but overall, obviously everything looks extremely bearish. Now let's get into the juice, the meat of the stuff. We've got the NASDAQ, got absolutely crushed, exactly like I said. Everybody got extremely bullish and said we saved price action. We were going back up. I said this was a clear rejection of the 8 and 21. We were unable to cross them back to the upside, consolidated below it, and got a massive, massive sell-off back inside this index. At which point in time we have found support now at the 89. We could potentially find support here and get continuation to the upside, and we have put in a low and a slightly higher low and then get consolidation. But at this point in time, everything is pointing to the downside. I think it's much more likely that we come back down to this key support level from these previous three peaks, this resistance turn support, which lines up perfectly for our 200 exponential and simple moving averages. So basically, I think tech is going to continue selling off down to basically like 12,000. 12,000 is my target on the NASDAQ. Looks very likely. And then obviously that would violate our internal retracement, which, we knew we were going to get rejected right here because we weren't going to cross the 821 back to the upside. We came back up and barely could maintain above the 618. So at this point in time, we're paying attention now to our previous, low right here, to our previous, all-time high here. And then we're going to pay attention to these key levels. We came down the first time and closed right at the 382, found support, came up. So I would expect this to come down to the 0.5, which is 12,200, or the 618, which is 11,750. Right in between is where the 200 moving averages and this key support area is. So that is going to be our main target, at least for a short-term bounce and attempt to find strength and continue to the upside. Although overall, I'm bearish on these markets. So next we have the Russell 2000. Once again, everybody got extremely bullish, said that we were getting the broadening out, the reopening trade. Everybody was diversifying into all these undervalued assets. The reason they're undervalued is because they're trash and they've gotten absolutely wrecked along with the economy. So that is why they're all quote unquote undervalued, but they still have extremely high valuations. Russell bursted to the upside, and since then we have had massive red selling candles coming in, and this is only strengthening to the downside. We have now confirmed our 821 cross on the daily. Exactly like I said, this is the most reliable signal. I specifically spoke about we have multiple stabs of bearish divergence. We have a high right here with a high right there on the price action. We have a lower high on the indicator oscillator, higher high on price action, and then we have a third lower high on the indicator oscillator and a third higher high on price action. That is 3 stabs of daily bearish divergence, at which point in time you would expect a massive sell-off. We have already closed a lower low on the daily, so I would expect at this point in time we've taken out the low, continuation to the downside. We've confirmed the 821 cross. First target is 2,083 to the 89 moving average. But really what we're looking for now is a massive sell-off. This Fibonacci in green here that I have in place goes all the way back to our 1 year ago March capitulation, all the way to our all-time high here. And you'll notice the 236 for the entire pullback is at 1920 and would line up perfectly with our 200 exponential moving average, assuming we do get down that low. But the initial target is going to be this 89 and that previous wick. So we have one level of support here, a second one, and then here would be our third one at the 89. At that point in time, I would expect a reflex rally off of that area and then another rejection. Now, it's possible we start showing like at least some temporary mid-week strength tomorrow, basically see like a reaction reflex rally, but I expect more weakness going into the weekend. But we'll play it by ear. Obviously most of these markets have taken pretty heavy hits already, so we don't want to get too greedy, but most of our targets are still just a little ways out, so we're being patient and holding out for those. YouTube's biggest secret. Hey, thanks, brother. Good to see you, man. I hope you've been doing well. It's been a long time since I've seen you in the comments, so you were one of the first way back in the day, brother. So here we got XLE, next our energy sector. So basically exactly what we said. There was a massive resistance level coming into play. We have clearly confirmed an uptrend by, this low right here, followed by a high rejection at the 200 exponential, a higher low on this low down here. And then once we flipped over, this is how I always determine the strength of a trend and whether or not we're in a bullish or a bearish trend. Once we get above the 200 simple, the darker blue one here, and the 200 exponential, the lighter blue one here, I always expect a retest for support. And then as soon as these slope, we want to be above those with price action, but we want to see, more importantly, we want to see the slope on these two blue moving averages back to the upside. So here they were basically level or to the downside. Here is basically when the 200 exponential or simple started flipping back over. And then from this point forward, right here at $38, we've been bullish. We have entered a new bullish trend, a bull run. At which point in time, we've gotten only upside movements to the top here. We already got 41% on the energy sector. Expect much, much more. We got above the 377 after a direct rejection, and then got above the 528. And now here, pay attention right here, we found resistance exactly where I said and got rejected before it happened. Remember, I told you about this rejection. We have come back now and found support exactly at the 528. Now, does that mean that we're going to find support and continue to the upside? On the micro, maybe not, but on the macro, yes. We are definitely going to get continuation on this, in my opinion, to the upside. The 8 and 21, though, are about to cross to the downside. The last two times that happened, we got a rejection of the cross right here and continuation to the upside. We got a slight cross right here and then continuation to the upside. So either one of those situations could happen. We could either reject the cross and get continuation, or we could get a slight cross retracement back down, you know, anywhere as low as basically 44.61. But to me, this is a buying opportunity. And if we make it back down to the 200 exponential or simple, I am 100% buying this ETF. This is essentially just energy sector ETF. So I'm extremely bullish on this long term. Energy is obviously the future, but you can see here from those previous, sell-offs here, this was a key resistance area. This was a key resistance area because previously it has acted as support. So once we made it through all this chop right here, where we got rejected the first time, a slight rejection the second time, and then we burst through it, this was our next key level. So once we break through this key level, after obviously we expect to get a rejection, come back down and find support around right where we're at now, because you can see there's massive support on these two levels where we're at, and there's massive resistance where we topped out right here. So that's how I knew that was going to happen. I would expect us to chop around in this range and then get continuation back to the upside. And, my next target on this, you'll notice it lines up perfectly with our orange Fibonacci's. We're basically back at the 0.5 right now. So my next target on this is to get that burst back to the upside, back to the 618, which is going to put us in at 57.30. So if we could find support right here, we could go slightly higher, but 57.60, 57.80, somewhere around there is my next target to the upside. But I do believe that we're basically getting a 1, a 2. We're going to get more continuation on this 3. And then after we get more of a move to the upside, we'll come back down for a 4. And then, basically this is the lowest area I expect us to get back down to. So I'm looking to basically ladder in buys along this area, anywhere as low as $40. But I just do not think it's going to get back down that far. So, but we will see. We'll see what happens. But energy is obviously bullish overall sector in my opinion. So, and then we have the clean energy. This is just basically like renewables, solar, all that stuff. But once again, it's an ETF. Topped out exactly where we said. Once again, I essentially spoke about these specific areas and potential areas I would be looking to take a long off of. So as soon as we topped out at $34, we had identified specifically the 200 exponential and simple moving average. And this is the exact area where I was expecting our first potential for a long, $22.89. I'm not looking to specifically rush right into this though, because I think it's likely we could get back down to the 382 or potentially even to the 0.5. What I want to see happen though, I want to make sure that this 200 exponential and simple stays angled to the upside. I do not want to see these roll over and price action consolidate underneath them, because that will look like to me like this temporary bull market that we entered into basically back in January of 2019. It will look like this is potentially over and that we're going to get a more substantial retrace. But going back to our bottom here in March 1 year ago to our top here, basically about a month ago, January, around a month ago, we're basically already pulled back 236. So it's likely that we'll get down to the 382 or the 0.5, but it's likely we will find a key support off of one of those levels or potentially like one of these moving averages. So again, I'm extremely bullish on this long term. The measure move and, Fibonacci extensions point this thing potentially way to the upside. And then obviously ETF gives you like broad exposure to the overall sector, without like having to pick and choose specific stocks, or, you don't have to pick solar or wind or whatever, like, you get a little bit of exposure to all of them. So definitely overall bullish on this, but I'm looking to see where it levels out. We could easily double bottom right here and get continuation to the upside. This is a 50% reward with a 16% risk. So that's 3 to 1 already. Our next trade, if we get back down to the next level, is 18% stop loss potentially, 72% to the upside. So again, we're looking at basically like over a 4-to-1 risk reward ratio, and if we get back down to the 0.5 and still put in a large stop loss like that, 20% stop loss if it goes down below the 618, which I probably would not even take a hard stop on this. I would just look at the actual strength and probably just be laddering into lower buys. That's 100% potential gain to the upside with a quote unquote 20% risk to the downside. So again, 5-to-1 risk reward ratio, phenomenally bullish overall, in this asset class. It looks great. It has very strong fundamentals. It has very strong technicals as well. And, we have confirmed a nice, strong trending move to the upside, and we are far, far away from our previous all-time highs. So just back up to this all-time high is where those moves are, or previous like cycle high, in January. If we actually get like moves back to the all-time highs on this thing, I mean, we're talking about ridiculous gains. You're talking about like over 300+% to the upside. So again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I'm explaining to you why I am taking these trades, why I have chosen to take these trades, and also to help you learn exactly how to set up your own trades and, figure out risk reward ratio and, potential likelihood of success. Because I don't want to take anything with less than a 2-to-1 risk reward ratio. And I also don't want to just go into a position without a clear defined target to the upside and clear defined invalidation target to the downside, in the form of a hard stop or potential soft stop, depending on the situation. So I'm going to take a quick look over at chat. And nice. Looks like we got a couple people in here. Good to see everybody. Thank you all for joining us. And we're going to go into crypto next. Make sure along the way, if you do have any specific assets you'd like me to take a look at, that you put them in the chat, and I'll be glad to take a look. Even if I jump to another sector and come back to them, it's completely fine. Nothing with like really short time frames of existence. I want stuff that I can actually look at and, chart out. If it's a couple months old or it's done nothing but spike to the upside or get crushed to the downside, there's not a ton I can tell you. So let's get started with Bitcoin right here. So essentially, I took a quick look at it at the beginning of the video. Of course, brother, thanks for joining us. Took a quick look at the beginning of the video, but exactly what I said happened. I said that we were going to get rejected here. I told you guys about, let's look at our weekly bearish divergence and, how I identified that and why I was expecting this powerful sell-off to take place. If you look at our indicator oscillator here, what happened? We topped out right here at 92.6, and then we came up and peaked out and started selling back off at 88.23. So we have a high here followed by a lower high. We have a hard sell at the top of the range, but we stayed inside the bullish control zone. So we do not take that as a hard sell confirmed signal until we exit the bullish control zone, till we leave the red area. And then also I spoke about this buy signal. When we get a cross back to the upside, already at the top of a range like this, I expect this to be a false signal. I expect this to be a broken signal, a divergence signal with continuation in the opposite direction. So what is likely to happen? We get the hard sell here, we get the hard buy, like divergence signal, and then we will leave the bullish control zone, leave the red highlighted area, and then we'll get another hard sell, at which point in time, this is the most reliable signal and almost always a topping pattern. A sell, a buy, a sell, a dump. And same with the opposite if we're at the top of the range. So here where we put in our high, that's it right there. Here where we put in our next high is right here. That is weekly bearish divergence taking place right there. Weekly bearish divergence usually results in a powerful sell-off. At this point in time, since we have been in this bullish uptrend, depending when you want to look at it, technically once we were above the 200 on the weekly back here, at like the $4,000 range, which specifically before I even had this channel, I've told you all multiple times, this is where I took my largest Bitcoin position I have ever had or ever purchased at one time, was in this $4,000 range. Once we broke above the 200 exponential moving average, market bought a substantial position of Bitcoin, and I have been net long on this ever since, including the massive sell-off back here where I reaccumulated more as well. But since then on the weekly, and you notice we have always had a positive trend on the blue 200 exponential and simple moving average. So Bitcoin has literally, since these are up on Bitstamp, been in a confirmed uptrend on the weekly since $200, which is before I ever paid attention to Bitcoin. Although I had heard of it, I did not think the government would ever let it happen. But here we are now at $60,000, and I can admit I was wrong. But I got very bullish on this when we came back down and got above the 200 exponential moving average. And here again, once we failed to, consolidate and get rejected by the 200, once we move back above it on the weekly, it was extremely bullish again. So here we are in a strong trending trade to the upside. And you'll notice that here on the initial breakout from 4,000 to the, rejection at 14,000 when we sold back off, we never came down initially back to the 21 until on the weekly, until we lost it and entered in 821 cross to the downside, 821 cross to the downside. And now here we confirm the cross back to the upside once again on in May of 2020, which is once again when I told you I was net extremely bullish on this asset. Because we got the 821 cross on the weekly, we're above the 200s, and we are in a strong uptrend. You will notice that on the parabolic SAR with binary pivots, that is the exact area where it identified the uptrend as well. We have gotten a series of tons of green dots in a row saying that we're in a strong parabolic uptrend. And at that point in time, only initially when we started moving off that, did we come back down to the 21 and retest it. And from that point, we have not come back down to the 21. So this bearish divergence at the top of a weekly range with a hard sell followed by a hard buy with potential of another hard sell coming into account here shortly, I would expect us to come back down and test that 21 moving average on the weekly, which is going to line up almost perfectly with our previous little top right here that we put in at 38,700 to 42,000, depending on what time frame you're on. That's going to line up perfectly with not only our parabolic SAR support, but also our 21-week moving average. So my target at this point in time, until something changes, is between $38,000 and $42,000. We are also doing exactly what I said would happen on the TJD TDMACD. You will notice we had multiple green histograms in a row, followed by 2 reds. Then we had 3 greens in a row, followed by another red. And I told you exactly what I did not want to see is 3 greens in a row or 2 greens in a row, followed by 1 or 2 reds in a row, because that is going to show weakness at the top of a trend, which again is going to lead to a strong consolidation or a sell-off or, basically bearish move. So here we have the 821 cross to the downside. We have multiple stabs of our bearish divergence. Again, depending what oscillator indicator you're looking at right here, on my stochastics, it's slightly different. So you don't actually have 3 stabs of divergence, but you do have one right here, followed by another one right here, corresponding to a high right here, followed by another high right here. So bearish divergence on the daily. And then again, if we look at, these are slightly better for trending trades, but slightly less useful for divergence. But when you see divergence, they're more powerful. So here you'll see, once again, we have a peak here. We have a lower peak here. We have one red trending slope line cross, a second red trending slope line cross, and now here we have flipped over the daily red again. So I would expect a powerful sell-off to the downside. This time, like I said, I think it's going to break through the 50-55. We could easily come back up here to the top of the range at 54.6 and try to break back above the 821 and stop this cross like we did here, or we could fail. We could come right here, fail, get rejected, and come back down. But I think the range we're paying attention to now is 49,400 to basically 55,000. So we have like 49,000 to 55,000, a $6,000 range, over 10% range. So I would be taking shorts off the top of the range, or adding to my shorts off the top of the range. I'll be taking longs, or adding to my position, basically spot position or scalp positions at the bottom of the range. It's very, very easy or likely though that we will be coming down here to a lower target. In this case, on the daily, I'm looking at the 89 moving average and this previous low right here. So we're looking at around like the 44,000 range. But again, my overall target is like this 38 to 42,000 range. Our previous little peak high right there. I do not expect us to get down as low as the 200 exponential or simple moving averages, but I am paying close attention to that and how this starts to shape out. But at this point in time, we have all but confirmed the 821 cross. Now, again, we could easily save it because that's what this looks like right before we get a massive push to the upside. But here you will notice we showed weakness, and it was strong weakness at the beginning. First, a big rejection of lower prices, but still a very red candle. Here, a very red candle, but still a rejection of lower prices. Here, a indecision candle, and then here, a rejection of higher prices, followed by a bearish body on the candle, and then indecision, but still selling off. And then we have a very strong bullish candle come in. Here, you'll notice we have A bearish candle takes out more than 50% of the daily candle before it, followed by, essentially like taking out the candle completely on the next one. And then we show a slight bit of strength off the 21, what I would call a reaction rally. And then we show weakness at the top, consolidation, a rejection of lower prices. And now here you'll see this is strengthening to the downside. Here we showed strength to the downside initially, and then it kind of leveled off. Here we are seeing a strengthening push to the downside. We have a very big, very bearish candle right here that reminds us of the initial one. We have a, indecision candle rejection, and then we have another very bearish rejection of higher prices. Today's candle that just closed, and then a strong sell-off after that to a new low. So exactly what I said happened. We had a high, we had a low, we had a lower high, and now we have a confirmed lower low on a daily. So we could easily come back up. I would expect us to put in another lower low, or we could just get that continuation straight to the downside. But this is an overall bearish pattern, and this is obviously a confirmed downtrend on the micro inside of obviously a macro uptrend. But losing this level of support initially right off the bat tells me that our next key support level is going to be down at like 50,000, where this was running into like resistance. And then obviously the next support where we bounced was 45,000. And then after that, we're looking for those key levels between like 42 and 38,000, which is overall where I think we're headed. But, we'll have plenty of time to play it by ear and see what happens there. Check out what's going on. Okay, great. So yeah, that's Bitcoin. We can look at futures. We spoke specifically about this as well. We have triple divergence on the TJD Fisher. We have a peak here. We have a lower peak here. We have a third lower peak here. We have a peak here. We have a higher peak here. We have a third higher peak here. 3 drives of bearish divergence. Massive sell-off, going to happen. We have here on the Stoch slope. If you're also new and you like stochastics, but you don't like the complication of it, this is the best indicator. It's super simple. It basically combines this red and blue line is your 2 Stoch lines combined into a single. So it basically goes by the cross and the slope. So when they cross to the upside, it turns it blue, and you only look at one line. When it crosses to the downside, it turns it red, and you only look at one line. But here we have a peak, we have a lower peak, we have a third lower peak. That is obviously corresponds once again for bearish divergence. And then you'll notice also incorporated in this indicator is another popular one, the RSI. In white, you'll notice this is the RSI. The yellow is the EMA of the RSI, exponential moving average. And then you'll notice here we have a peak on the white, a peak on the yellow, a peak on the white, a peak on the yellow, a peak on the white, a peak on the yellow. So once again, 3 drives of bearish divergence. And, obviously we would expect a sell-off. And then once again on the VPCI, we showed strength back here on the initial push up to 40,000. And then from then we have showed strength, but less and less strength, less momentum, and the likelihood of continuation becomes less and less. And that's essentially what the divergence is, showing us. So there's Bitcoin. We can look at the shorter time frame real quick on Bitcoin too. And I can just kind of point out, essentially what I'm looking at here. We have not only confirmed on the 4-hour the cross to the downside and then rejection of the attempt to cross back to the upside, but we got the initial bounce off the 200 exponential and simple. And now here we've broken down below the 200 moving averages, and we are currently consolidating below them. What we need to happen on a 4-hour time frame, which is going to preclude like the longer daily or weekly time frame, we need to get back above the 200 exponential and simple. So we need to close back above 53,300 and then at least consolidate and potentially get continuation. If we do not, these have already leveled out to basically zero slope. If we stay below them any longer, it's essentially going to flip these over negative, and we're now going to enter a short-term 4-hour bear market, or extended consolidation or correction period, at which point in time the 377 at 48,000 or the 528 at 44,000 will be relevant on the 4-hour. But once again, extremely bearish looking, but it was all there ahead of time. I know everybody says Bitcoin to the moon, but this is a technical analysis channel. Doesn't mean that we can't still go to the moon, but in the meantime, there's going to be a lot of other moves, and we capitalize on those moves. So in the event that we do lose the 8 and 21, and it looks like we're going to be entering into an actual like bear market, I will probably take my position like negative. So right now, although I want to talk about something real quick and then we'll do some more technical analysis, I want to talk about the 3 levels of positions that I enter into. When we're in a long-term bull market, like on the daily or weekly, depending on the asset, it's a little harder on Bitcoin because of its shorter you know, it doesn't have like 50 years or 200 years of like price action. It has like 10 years, 12 years. So you can't really do as much on a weekly with the 200 moving average. But essentially, my spot position or my hodl position or my like overall investment position is my longest time frame one. So as long as we're above the 200 moving average and moving to the upside from back at like 4,000 and the earlier ranges that I pointed out specifically off of the weekly and daily, that's my spot position. I'm bullish, so I'm going to be net long. I'm going to have those positions, and my goal is to never sell those positions unless that condition changes. So when you sell crypto, if you buy it and then you sell it, you enter into a taxable event in the United States. And keep in mind, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. I am not an accountant. I'm not giving you tax advice. I'm telling you what I do and why. So the rationale is that you want to avoid as many taxable events as possible, because I don't want to have to pay taxes on my gains until, you know, I decide to. So obviously I do not want to enter into a taxable event if I don't have to. So what I do is I don't sell my hodl position. I don't sell my accumulation, my spot. I then trade on leverage in relation on shorter time frames. So I will what's called swing trade. And again, this might be obvious to a lot of you guys, but I will swing trade based on like daily movements or 4-hour movements in and out of long and short trades with leverage. So if I'm net long on the asset through my accumulation or my spot position, I can then hedge that position with sells, either net moving my position to the downside, which is very unlikely in an overall uptrend, or just scalping out like with those swing trades profits along the way. So the idea is that I'm just going to hold my Bitcoins through an uptrend as long as possible without ever selling them, so I don't have taxable events. And then inside of that, I am then going to take swing trades, like, you know, sometimes it'll be for like multiple days, weeks, even months to the downside, in which I will basically be selling to go flat on those positions. So no matter what happens, I still have that same amount of Bitcoin. Let's say in this case, I have 1 Bitcoin long. I will then take a short position when we start getting those crosses and look like we're going to the downside. I will take a leveraged short position for 1 or more Bitcoin to the downside. So as long as Bitcoin's price drops, let's say from, in this case, we're looking at 42,000. So if I'm on Polkadot chart, but let's say that we're at the 62,000 range on Bitcoin. You know, I will take that short up here when it looks like we're going to go down to the downside. So I'm not selling my Bitcoin. I still have my 1 whole Bitcoin, but now I'm either flat in the market, so I have exposure equal to the downside of 1 Bitcoin. So as price moves down from like, let's say 62,000 down to 50,000, I now capture that difference in cash, in money, but I still have the same amount of Bitcoin. So I technically didn't make any more money or lose any Bitcoin, because I still have a Bitcoin that was worth $62,000. Now it's worth $52,000, but I also have $10,000 from my short position. So if you take all the Bitcoin and all the money and add them together, I still have the exact same amount. But now when Bitcoin continues back to the upside, I can then use that cash to buy more Bitcoin. Or if I don't do that, I still have the same 1 Bitcoin, but I also have $10,000. And then when Bitcoin gets back to $62,000, I have captured that $10,000 gain by closing my short. So now what has happened? I have a smaller taxable event only on my profitable position to the downside. Or if you hedge yourself and then price moves against you, your hedge gets taken out, your short position gets closed, you might even take a small loss, but your taxable event now is actually a tax write-off, because you have technically lost a couple dollars, whatever your stop loss was or whatever your loss on the trade was, but you have not sold your initial spot position. Therefore, that is not a taxable event. So now you have a write-off that's a loss in the markets, but you don't have to report your long because you haven't sold. So the taxable event hasn't actually taken place. So you actually have a net negative, which you can use to write off some of your other gains and other assets. And then the final position I will enter is like a short-term scalp position, which is like typically when I'm trading like the 4-hour or something like that. And that's basically when I'm expecting like a reflex rally or something like that off of like a very short-term move. Like exactly what I was talking about with the 4-hour. When I took the long position off of the 200 exponential and simple, I ended up buying, I think it was like around 54,000. I told you in the last video. But I basically took a scalp back to the upside. So I still have my long position spot accumulation or like hodl position, and then I still have my short position to the downside, and then I close my scalp short position when we hit the 200 exponential and open a scalp long position back up here. And then once I get out of my scalp long position again, I have full exposure back to my scalp short position. So, basically have multiple positions working with the rest of the market and creating as few taxable events as possible, and then offsetting my short-term gains and losses. Because anything less than 1 year trade that you're in or position that you're in is going to be taxed differently than anything over a year in the United States. So it will be taxed at a higher tax rate. So I want to offset as many of those gains as possible, but obviously the goal is just to make money. So I would rather pay taxes on profits than not pay taxes on losses. So the idea is to make as many profits as possible, but it's okay to take some losses along the way because they would just offset some of the gains. But the goal is to never get rid of that long position as long as we're in a long trending trade to the upside, which is what we are in. We are in a daily and weekly bull market. So until that changes, we are not going to get out of those long positions. And just like I discussed specifically, once we get down, in this case, the likelihood of exiting a bull market now is very unlikely anytime soon because our 200 exponential and simple moving averages are still strong, trending to the upside, and way down here at 33,000 and 28,000. So the likelihood of us entering into a bear market, we would have to basically come all the way back down here to like 30,000, consolidate below the moving averages, flip the slopes back over to the downside, at which point in time I would no longer be net long in this position to the upside. So just a little like detailed breakdown of how I look at a bull market, a bear market, and then you can look at how in Bitcoin we're in a very strong daily bull market. You can pay attention now to how I talk about some of the other assets in different markets and why I determine whether or not they're in an actual bull market and what time frame, so we can pay attention to them. Because if you got into Bitcoin, we're at the bull market around the 200 exponential simple moving averages. We're up 657% since then. So we don't want to just get out of a trade and then it continues on up because we saw like a little sell-off right here, that head and shoulders pattern, and then go net short, and then we just never buy back in and we miss out on all these gains. So there is just a detailed explanation of moving averages and why they're so important, as well as identifying bull markets and different time frames. So all right, cool. So I'm going to keep going here. Sorry I went on kind of a long explanation there, but hopefully it helps some people. Specifically, what we said happened on DOT. We had topped out here and then been failing to put in a higher high. We got that massive, this is the Kraken wick, massive Kraken wick capitulation. But if we just ignore that, we basically had a flag pattern taking place. And exactly what I said I expected to happen was we came back down here to the blue, to the blue, to the blue, came up to the top here, to the top, to the top, to the top. I told you we were going to get a failed breakout to the upside, which we did. And then we got a strong rejection. We closed outside of the pattern 2 days ago, tried to push back up inside of it again, got rejected off of our support, turn resistance. And then we got a equivalence of a capitulation dump down here, back down to the $30 range from, we were just at $39 range, $40 range. So that's a massive sell-off right there at 25% sell-off. Depending where you're going from, wicks or bodies. Let's just go from body to body where we're at right now, 20%. If you go from wick to body, you're talking about 25, 30%. But at this point in time, we are now below the 50 exponential moving average. I told you there was no real trade to the downside if you are already in a trade to this. I got out of this position already back in here. So I'm out of, actually sold the majority of it back here, but I got out of my position from back here along the way. I actually missed this peak right here and got out somewhere around here, but there was no real trade to the downside to be had with this, in my opinion. But the next trade, the next key trade I'll be looking for is essentially a potential long position off of the 89. You'll see I have the measured move here in red. That is the measured move of the pattern. You can obviously use the flagpole, but I prefer to, capture like the smaller, more likely position, in which case I'm expecting continuation to the downside down to like 25.80, at which point in time I'll look for a scalp long on Polkadot. And then I have 2 trades here in place that I will be looking for. The first is going to be a 7.6% stop loss to the downside, 15% to the upside, 2-to-1 risk reward ratio. And then the second one, and again, this is still staying inside of a bearish position, assuming we don't get back up to the all-time high, but we have a 35% potential reward with a little over 7% potential risk. Once again, that's like 5-to-1, little less, 4.5-to-1 risk reward ratio. But again, I'm expecting, as long as we're below the 821 and cross to the downside, when did we get bullish on this thing? Let's go back here and take a look. I got bullish back here once we broke through. I could have got bullish a little earlier than I did. I had a small position here from like $4 and $5. But once we took out this top here at 590 is when I made that video right here. I told you guys I was going net long on this. We took out the parabolic SAR from this ridiculous like dump candle right here, the biggest red candle I've ever seen in my life. We took out the parabolic SAR. We took out the high right here. We had the 821 cross to the upside, and it looked like we're entering into a bull market. And we did. That was back at like, $5, $6. You even had a second chance to buy that, which I told you I actually accumulated more into my position around $8 when we found support on the 21. And then I told you specifically I was expecting us to break through here at that $18 range. It failed multiple times, but essentially once we got that break and measure move, we have only exceeded my targets. And obviously I was lucky or intelligent enough to get out of this position before that Kraken capitulation dump. But, I haven't been back in anything other than just a quick little scalp position since then, as markets have been looking extremely toppy and bearish to me. So next we have, let's look at Doggy Coin, Dogecoin. Basically, we went over this quite a few times. Very similar situation. 821 cross to the downside here. We saved it. And then now here we are at the 821 cross again. We're below price action. We're at the 50-55 here in green. Let me turn that off for a second. We're at the 50-55 here in green, getting ready to potentially flip over the parabolic SAR from green to red, at which point in time I would expect our next sell-off to come back down and put in what I've been calling a descending triangle. We have a low down here at 4 cents. I expect to retest that low at 4 cents right at the 89 moving average, at which point in time I expect these potential measured moves to take place. If we break down from that area, this is our capitulation measured move. It looks huge because we're on the log scale, but that is again just the measured move of that triangle. If we break down from that descending triangle, I explained this in my previous video. If we do not find support at like 2.8 cents, and I think I said like 28 cents or 50 cents, you guys know what I mean. If we don't find support at 2.8 cents, which is like around 3 cents is my first target to potentially get a buy on this thing, my next target is I basically will skip this target at the 618-200 simple moving average at 1.7 cents, because this daily candle right here, if we break down below 2.8 cents on a daily candle close, I expect us to come back down here to a penny, because there is no support built along the way right here. So the same way there was no resistance, we just blew straight through it and went straight to the moon when everybody bought into like Doggy Coin, even though it's useless and has no actual purpose or like strong fundamentals or anything. It's not useless, but I mean, let's be real. This is obviously a massive bubble. But it went from a penny to over 8 cents. I would expect it to drop massively back down, potentially to like, around 1 cent. So that's where I'd be looking for a long. Anywhere in here in the middle is basically a no-fly zone for me. But we could easily find support and get continuation from 3 cents. But again, this is just going to do what the other markets do. And, tell you the truth, it looks like shit. These are like Elon Musk tweets along the way, like attempts to pump, basically his trash bag coin. So, Chainlink, let's look at, and don't get me wrong, I love dogs. Just Doggy Coin is a joke. Chainlink, we were bullish on this thing back at $2. You guys know if you've been part of the channel. When did we get above the 200 exponential? It was $2.75. Been massively bullish on this thing the whole way. I did get out of quite a bit of my position back here and actually reaccumulated at the 200 exponential. Got taken back out of my position on this crazy stop hunt, and then once again got back into a small position, much smaller, back here at like 20 cents or $20 rather. But again, it was very clear that we were topping out here. We showed divergence on different time frames, got the hard sell, left the bullish control zone, got that capitulation wick. I've not been in a position since then. We are now basically at what I told you I was expecting this. People were saying this was a, bull flag and they were going to get a move to the upside. I told you exactly what was going to happen before we sold off past here. We're going to come back down, and this was going to very, very clearly identify itself as a descending triangle. And now here we are. We have very clearly found support at that same bottom. We now have a flat bottom with a descending top that is clearly a descending triangle. Again, I identified this potential long trade, 17% to the upside, 16.7, or 7.5% to the downside. 2-to-1 risk reward, not a bad trade. You know, I'm going to look at what the other markets do, but I'll potentially take this on a scalp back up to the top of the range at $29. But, you know, this is basically where I identified. But more than likely, and what I'm expecting to happen is the breakdown of this pattern, which I've already identified the measured move from the top of the pattern to the bottom. I don't like to use measured moves of the flagpole because they almost never get hit on log scale on these like exponential percentage moves. I would rather just capture the majority, the meat of the position, and take profits along the way, or run a trailing stop loss. Make sure I don't give back those profits. But essentially what we're looking for is something like this. Some kind of massive sell-off, either down to the 200 exponential simple at like $18, $19, or back to the 377 at 1440. And I specifically spoke about these wicks many times. A lot of times what happens is you get this massive wick capitulation, gets bought back up, and then we slowly just see it bleed back out, back down to the wick or close to it. That's what I expect to happen. Kraken just has like lack of liquidity, and people fat finger sales like idiots and think that they're going to be able to just dump a position, and then they just clear out the books. And then bots step in, or people market buy, and it pushes price back up, and then it just bleeds back out. So I think it's very likely this thing will be back down at like $14.50. I'm going to take a quick drink, and then we'll take a look at Uniswap, Uni. All right, so Uniswap, Uni, again, if you've been following the channel for any amount of time, you know I got bullish on this thing at, it was about $4, a little over $4. Once we broke through this little string of highs right here, closed above it, or actually broke slightly above it, and then came back down to the 8 moving average. 469 is when I identified that long position I'd be taking. You had, again, a second opportunity to take that long off of the 21 moving average, at which point in time, we have done nothing but go parabolic since then. So here we are up 620%. Once again, I identified this key area that we were expecting to potentially break through. We broke to the upside, failed to hold, and then finally got the measured move that we were expecting from this ascending triangle that was taking place right here. Blew through it. I got very bullish on this thing again at the top because we put in a high right here. New all-time high. New all-time high. A lot of other things we're not putting in all-time highs since March. So, you know, we didn't see an all-time high out of like Ethereum. Damn, did we get a new one in Bitcoin since then? I can't remember. But anyway, this thing was looking bullish as we were putting in a high, a higher high, a higher high. At which point in time, I told you I was expecting this essentially to come back down and then sell off. And you'll notice here, it looked like we were going to break out, but this is why it's so important to get a breakout confirmation and continuation, like breakthrough resistance and then find support on top of it. We have a rejection wick, a massive rejection wick, and then a even worse rejection wick, followed by a bearish engulfing candle that took out the prior 3 candles in front of it, at which point in time we got this dirty, dirty dump right here. So, you know, to whoever bought here at the top without confirmation, suffered like between a, you know, where we're at right now, 25 and 30% drawdown. So that's why you wait for confirmation, because the best way to lose your entire account and no longer get to play this game is, you know, by buying unconfirmed breakouts. So sorry if anybody here was part of that. But, you know, if you're in this position from way back when, you're massively up still. But once we broke down from this trend line here, you know, we have one touch there in blue, one touch there in blue, and then here came down to it, blew through it. I would expect us to come back up and try to cross this 821 moving average. You'll notice also on this thing, the 8 and 21 have been crossed to the upside this entire time. We never lost them like we did on Ethereum and Bitcoin, never even came close to crossing them back to the downside on the daily. And now here we are finally below them. I expect us to get a move back up to that break of that blue trend line here, or the second blue trend line here. I think more likely the lower blue, the lighter one. And retest the 821 and then get rejected at like $30. So over a 10% move back to the upside, but I'm definitely expecting rejection. But we hit our targets. of the 50-55 to the downside. Fell just short of the 55 exponential, but made it to the 50. That was obviously a scalp buying opportunity, but again, I'm not going to jump back into this thing anytime soon. I think it's more likely we get continuation to the downside, but you know, this would be a key buying area for me. This key resistance turn support and also the 89 exponential moving average. I'll look to get back into this for like a potential long-term trend trade, or even just a scalp at like $20. But there's going to be some trading inside the range here, but I'm good on that. There's plenty of other more important things to trade in the meantime. But overall, I do like Uniswap. I do like Polkadot. I do like Chainlink. I do like dogs, and Doggy Coin is fun. And then next we'll go to Ethereum. As you can see, put in our high on Ethereum at $2,000. Everybody was calling for $20,000. People were leaving their Bitcoin positions and entering Ethereum positions. And I told you exactly what was going to happen. We're going to get the measured move break of this ascending triangle, and then we were going to capitulate and crush all the idiots that got bullish on Ethereum. We did not hit $20,000, unfortunately, to much of the dismay of all the massive Ethereum bulls. Not going to happen. I still am not fundamentally that bullish on Ethereum. I do like the project overall, but there are still a ton of flaws, such as gas fees, you know, the potential of, you know, transferring from proof of work to proof of stake. The people that are working on it are humans, even though Vitalik Buterin seems like a robot. He is still not as smart as he thinks he is, and people think he is. He's just a little bit smarter than most people, so it's easy to fool them. We have done nothing but put in lower highs. So we put in a high here at 2,000, put in a lower high exactly at the 886, where I entered my initial short position at 2,000, just shy of 2,000 again. And then I told you it was going to be tough to try to take a short here, because you're going to have to put a decent stop loss in place. But I put this position out there for everybody. I didn't enter another position. I'm already in a profitable short position, but you can see the stop loss I identify would be 6.8%. The potential gain to the downside will be 18%. 3-to-1, over 3-to-1 risk reward ratio, or around 3-to-1 risk reward ratio to the downside. And as you can see, we have done nothing but capitulate since then. Got this massive sell off. You were never even in danger of taking out your stop loss right here. We basically came down, enter this position, or would have entered this position, but like I said, I'm already in a position, and then just capitulated from then. So you were never in danger. To anybody who took this position, you are already up 10%. So if you're using like 3, or in my case 5x leverage, you're already up 50% on your position. Congratulations. And once again, entered into a confirmed clear downtrend. This is what I was saying about Ethereum looking like shit. After $2,000, we sold off violently. If you were on Kraken too, this thing sold off to like $800 on Kraken instantly. At which point in time I took a long off like $1,000, and it was back at $1,400 like 10 seconds later. So this is Bitstamp, so it obviously didn't sell off as violently. But you know exactly what I said happened. We found support on the key level that we had broken through, came back down, found support. Even if you took a long out of this position right here, it's very clear that we're just going to come back down and retest this position, and then we're just going to create a gigantic descending triangle. So depending on how you want to look at it, if you want to look at a different time frame, if you want to go from wicks or bodies, you know, what are we paying attention to right now? A series of lower highs, you know, potential dump city in this bitch. I mean, it's, you know, it's been getting crushed ever since. So we have a top, we have a bottom, we have a lower high top, and then here, look, we're coming back down to the bottom again, at which point in time, it's very likely going to be a buy off of this key support area, off of like 1,400, off of like 1,465, the 89 moving average. When we get down to here, that's why my take profit position is in place here. You'll take profit and trail your stop loss along the way. Again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I'm explaining to you why I identify these potential risk reward setups, and then why I identify my specific targets and my specific stop losses. So my stop loss is obviously if we break out above this clear resistance line we formed, and also take out the previous micro high inside of the trend line. So if we go above that and take out the parabolic SAR, I want to be out of the position. So that's why my stop loss is there. And then here, this is the 821 cross to the downside, which is a perfect place to enter and continuation to the downside. And then here you'll notice my key target to the downside is once again this key support area, and also the bottom of what's going to look like a descending triangle. So what would likely happen here? We would break down bounce, come back up, put in another lower high, bounce, come back up, put in another lower high, and then finally get a capitulation dump to the downside if we break out of this pattern. But of course, it's going to just be whatever Bitcoin does. But if that happens, Ethereum will go to zero. Wait, not zero. $800, which again, a lot of times, like I said, you get a massive capitulation move on an exchange like Kraken, and that's exactly what you expect to happen. The $800 move that already took place on Kraken, it will just be Ethereum getting, a reflex sell-off dump because of lack of like liquidity on the exchange, followed by getting bought back up, and then the pattern plays out, and then we get the actual like bleed out into that target. So again, key targets would be down at obviously initial targets like 1400, 1500, then after that the exponential at 1000, the simple at 900, and then the final measure move back down to like 800, at which point in time this thing is going to look very, very dangerous, like we're in an overall macro downtrend. So paying close attention to that. It's obviously not going to happen overnight. The next target is clearly the bottom of the range, at which point in time I will be closing my shorts along the way and then looking for a reflex rally back up to the top of the range. So I've got one more crypto and then a couple like crypto related assets to look at. And then we'll take a short break and go into like, I think either commodities or maybe I'll do tech next. So, but I'm planning on going till at least like, I started at 8, it's 9:11 Eastern Standard Time now. So I'll go until at least probably 10. We're probably going to run over. So let's say 10:30 or 11. But if you do have any requests along the way or questions or anything, obviously feel free to call them out. Spoke specifically about BAT. I told you this was a beautiful asset to get into at like 25 cents. Once we got above the 200 exponential simple, flip this over. This thing got bullish way after everything else. So you got to take all your gains from everything else, or whatever gains you want to take, all your profits, and then put them into this thing and then let it run after everything else already did. So if you got bullish when I did around this range, to around the top of the range, 427%. Mad gains. Congratulations to everyone. I know it was probably hard to stick this out here, but again, we never crossed to the downside on the 821. I did take small profits along the way right here, but repurchased at the 21 right here. And then again, took some small profits, and I identified these in previous videos at like the 80 cents. I think it was right here actually at 80 cents, and then bought again at like 65 cents. And then once again, I told you specifically I was taking profits on my position at $1.23 after this rejection to the upside. And then, took a scalp position, or what I was hoping to be a scalp position, off of a penny. It went back up to like it was like $1.10. I'm sorry, off of $1. It went back up to like $1.10, and I don't even think I moved my stop loss. I think I got taken out basically flat on that position. So we're now below $1. Gonna have to see what happens here, but I'm thinking this thing is probably going to show some weakness. We got the hard sell on the daily. We're out of the bullish control zone. We've put in divergence. We're getting massive amounts of red histograms. It's likely that we are going to be coming back down to like 72 cents. I'm extremely bullish on this thing fundamentally, and obviously the chart is beautiful. If you're not using Brave Browser, I highly recommend it. Don't ever look at an ad again, and if you do want to look at an ad or click on a button, you can get paid for it in BAT for free. This is one of the best cryptos because it is utility token. Brave is a useful thing. It does something you're already going to do, which is use an internet browser. It does not steal your information and sell it to companies, so it gives you privacy. It is on the blockchain, which is awesome. There is no third party like risk of like Facebook or whoever like buying your information and then selling it, or Google using your information against you. No counterparty risk. You get something that already you were going to use anyway, and it works better. It blocks all ads. If you're watching YouTube right now and you're not using this, take a break from the video, go and download Brave Browser, because you will never have to watch another ad on YouTube again. It will bring up a little thing at the bottom that says skip, and you can literally skip the ad. It never even shows up, and you basically see the little skip screen for like 1 or 2 seconds. And if you don't press the skip button, it automatically skips it for you. You don't have to watch stupid 2, 3, 5-minute ads for all the people that are monetizing their videos. Absolutely amazing. Definitely download Brave Browser. That is advice. It's not financial though. Also, you get free BAT. So right now, while BAT is like $1, I think just for using the browser, and I use it on like all my computers, except for my actual trading computer, just because I prefer a little extra security on that. I have like, 3 computers that are paying me anywhere between like, $2 and $10 a month to do what I was already doing and not watch ads. So how can you possibly beat that? So anyway, there's your little pitch for a Brave browser and basic attention token. Again, be careful on this one as it does look very toppy at this point in time. I would expect support between 82 cents and these key moving averages and previous like highs or resistance support around like 60. So basically 60 to 80 cents, somewhere around there. I'm looking for it. But we'll probably get a reflex rally off of the slope line here, off of like the heart line of the channel on the stochastics, and it'll probably line up with like the 821 or below it, attempting to stop the cross to the downside. So that's it for cryptos. Next, we're going to look at Riot blockchain, crypto mining stock. Did exactly what I said. Topped out here. It looked extremely bearish. We prevented the 821 cross. It sold off all the way back down to the 89. The 50, 55. And when I say 50, 55, if you're not familiar, the two moving averages that I use on this indicator are the 55 exponential moving average, which is great for crypto, and the 50, and it's also a Fibonacci number, and then the 50 moving average, which is used typically by like traditional market traders. So as more traditional market, like educated traders, transition into the crypto space, you will see more relevance on like the 50 moving average and the 200 moving average, which are both simples, as where typically I like to use Fibonacci numbers like 8, 21, 55, etc. And I like to use exponential moving averages like the 55 exponential, the 8 exponential, the 21 exponential, the 200 exponential, because of the massive moves and percentage gains in crypto. The exponential moving averages weight more heavily the more recent candles, as where the simple moving averages give an equal weight to all the candles through the range. So if you're looking at a 200 simple moving average, it's going to weight each of the last 200 candles equally and then divide them by 200, and then it's going to give you that position of the moving average down here, the 200 simple, and then the exponential moving average is going to give an exponentially strong weighting to the more relevant candles. So this candle, when it closes, will be the most relevant, followed by this one, followed by this one, followed by this one, all the way back 200 candles, and the 200th, the oldest candle, will be the least relevant and get the least weight. So it basically just helps with like log scale exponential moves like crypto does. So here on Riot blockchain, we are now in danger. It did exactly what I said. Topped out at 786, got massive rejections. 1, 2, 3, 4, 5, 6, 7 rejections in a row, followed by weakness, rolling over. All the traditional markets just rolling over, showing weakness, dying. I would expect this to pour out like a waterfall now. We are very close to confirming the 821 cross to the downside. We could easily find support here or double bottom or whatever and attempt to stop this cross happening. Something like this could easily happen. We've had pretty big sell-offs in all the traditional markets and crypto at this point in time, but I'm not trying to get overly bullish on this thing anytime soon. I would be potentially looking for a scalp off like $41, but this thing has already dropped 50%. It's a crypto mining stock, basically. And then also, and a fundamentally like bearish thing for crypto mining stocks is you can't even get equipment right now because there's a massive semiconductor shortage. So you can't get video cards, so you can't get crypto mining equipment. Therefore, the likelihood is that crypto mining is only going to get worse. The blockchain is only going to get weaker until we take care of this bottleneck in the supply chain. So, and semiconductors are in high supply because they need them for everything from cars to video cards to pretty much anything electronic, and we can't get them. We get them from China and Taiwan. We make almost none in the United States because we have sacrificed efficiency and strength of our supply chain for profitability, which is exactly what COVID has exposed. So, but anyway, little mid-video rant. I would expect us to come back down here and retest these key levels at the 236 in green, at the 50-55 at $42, or this bottoming area at $35. If those do not hold, I would expect our support to be somewhere between $20 and $28, at which point in time, depending on what's going on in the space, I'll be looking to accumulate on Riot blockchain. And then finally, let's look at MicroStrategy and Michael Saylor's Hot Mess Express. I love laughing at this and the absolute stupidity of what is MicroStrategy. This thing was valued at $100. Michael Saylor announced his Bitcoin position and his purchases. It then went parabolic up to $1,300 from the initial top at $1,300. And this thing basically was a cryptocurrency ETF. So anyone smart just bought Bitcoin. Anyone that was dumb bought MicroStrategy. or that didn't have the ability to buy Bitcoin through regulation or whatever, its initial drop off of the top, which it will probably never get back to again, at least not anytime soon in this cycle, 60% to the downside. So everybody talks about how smart Michael Saylor is. If he was that smart, his stock wouldn't have gone down 60%. It is clearly in a bear market after a 20% move to the downside. It's a technical bear market. So 60% is a capitulation, death. This is MicroStrategy is in a depression right now, and probably headed to somewhere close to zero. The absolute value of MicroStrategy, in my opinion, is about $100, which was the price of the stock before it became a Bitcoin ETF, plus the total amount of all its Bitcoin divided by the total amount of all its stocks and investment offerings, and you can divide it out and figure out what it's actually worth. Because what is it worth? $100 or zero, depending on if you believe in MicroStrategy, plus the value of its Bitcoin, because you would assume that whatever the value of the assets that it owns are, it could just liquidate those assets, and it would have that value. So I told you about the short position on MicroStrategy at $774. If you missed the one from $1,300, you could have easily took that short rejection off the 821 that I identified here with a 7.6% stop loss. And from that entry point already, this position is profitable 20% already. So you are never in danger of your stop loss being hit, and you are already up over 20% with no leverage. We are potentially going to double bottom right here, at least on the short time frame. But based on this massive bearish engulfing candle, based on the rejection of the 821 cross back to the upside, I would expect us to at least get continuation to $589. Although my target is the 382 down here, which is why I've identified that, and potentially the 200 exponential moving average at $466, which point in time, I imagine probably somewhere along the way, Michael Saylor will put a pistol in his mouth and give up. But we'll see what happens. The thing still has potential. I mean, he can, he's going to be in big trouble if his stock capitulates and Bitcoin goes into a bear market and capitulates. And he went from being massively up and bullish on his fake ETF to, in a drawdown position. And I know he says he's never going to sell and this, that, and the other. But, when you go from like over 500% in profit to flat or negative, because right now, if you look at his Bitcoin position and his dollar cost average, his DCA and overall purchase price on Bitcoin is like $28,000, $30,000, assuming he hasn't quote unquote bought the dip again. So if Bitcoin gets back down to $30,000, he will have gone to a quote unquote genius rocket scientist to a quote unquote moron with a wooden ship in the background of all his videos. So in my opinion, Michael Saylor is not Bitcoin Jesus. He is Bitcoin Judas. So he is an idiot. I think it's funny laughing at him and watching all of his stuff get crushed. So going to take a short break there, and then we will proceed into some of our other assets. Hope you guys have enjoyed the video so far and my rants. If you disagree with me on anything or are curious about any specific targets or anything, I am more than willing to explain them, debate on them, or if you want to explain to me why Michael Saylor is so smart or so cool and you love him, or he's your father or your brother or whatever, that's cool too. I don't mean to hurt your feelings. I'm just busting his chops. So I'm going to take like a 1 to 2 minute break, grab a drink, and we'll be back and we'll jump into, I think we'll probably do commodities next, and then we'll do our tech sector after that. So All right, that was actually pretty quick. I'll give everybody a second if you had stepped away or whatever. Can you guys hear me all right? I can interact with chat for a minute while we kind of just hang tight and get back to it. How's everybody doing today? Glad to see people have showed up. Sorry about the last minute change of plans. I forgot I had a previous commitment for tomorrow, and it all of a sudden occurred to me that I wasn't going to be able to do the live stream. I thought about doing it earlier in the day, but I figured with all the volatility and everything going on, I would go ahead and just do a live stream tonight. But I do want to start doing potentially like I try to space them out, but I want to start going to. I've been consistently doing 2 live streams a week as of late. I want to do 3, and I'd like to do 1 in the mornings, either like just before or just after market open. I don't know what day I would do it specifically. If I'm doing Sunday nights and Wednesday nights, I would like to kind of space it out a little bit. So maybe do like Friday morning or something like that. Just to like help out people in Europe or like people that have different, times available, etc. Because this is a pretty international channel. But I'd love to hear you guys' feedback. If you're not here right now and you're watching this on playback, feel free to either leave it in the comments or whatever, and let me know, what your preference would be. But I'd like to space out the videos as much as possible with the live streams. Also, this week I started doing the static videos again in between live streams. I know after I had asked about that, it sounded like people were definitely in favor of having like the long live streams with the short static videos. So if that keeps working out and everybody's enjoying it, I'll keep doing that as well. And then, once a week I'll probably clown on some people. I don't know if you guys caught my little update earlier, but definitely had a little fun with my impromptu little song there. I hope you guys enjoyed that as well. And we didn't hurt Kathy Wood's feelings too bad, or Jay Bravo, or Meet Kevin, or Michael Saylor, or I'm about to be the most hated man in crypto, which also I thought it was really funny because I mentioned Meet Kevin and his Tesla / Snowflake / Lemonade / portfolio that he was bragging about like a couple months back, and told him he should do an update on it. And apparently he watches my channel because somebody either told him about it or he saw it because he subscribed to me this morning. So that's how you know you've made it, when Meet Kevin subscribes to you. Maybe sometime in the near future, I'll get like Jay Bravo and Graham Stephan and all these other guys. I make fun of Crypto Zombie all the time, so maybe he'll subscribe eventually. I think it's funny. If people don't like to get their chops busted, they're in the wrong space. I like giving people a hard time, but no harm, no foul. If you are listening, guys, I don't mean to hurt your feeling, Kathy Wood. So yeah, let's keep going here. Let's jump into, do you guys have a preference what I do? I'm just going to go, let's do commodities next. So yeah, gold, man, if gold didn't do exactly what we talked about, we consolidated here at that heart line. Let me turn off the moving averages really quick here. We bounce off the bottom perfectly off of our 2 key levels. So let's zoom way out here on gold. These were our 2 key levels. When we bottomed out here at 1100, and you guys know that I got massively bullish on gold at 1300 back in 2019. Anybody that followed my previous blog post before I had this channel knows I was massively bullish at this consolidation range at 13,000. We then got our huge push up here. We hit the exact level that we were expecting to hit, the previous all-time high of like $2,000, at which point in time I told you I expected a elongated consolidation or downtrend to go into effect. And now here we have bounced this level right here, this green trend line. We bounced it exactly at the bottom of this channel as well. So we're basically putting in a cup and handle on gold. We have a descending channel now, consolidation pattern. At some point in time, we'll finally break through this and then come back up. And we have made a, let's zoom way out here. We will have made a giant cup right here, followed by a descending channel, bottoming pattern, and then a rounding pattern, smaller, that does not take out more than half of the cupping pattern. And that will be our cup, followed by our handle, at which point in time a technical breakout will give us a massive measured move to the upside, which, without going too crazy on this thing, if we look at the measure move potential on gold, just going to drag that up to the breakout point, and then we can take a look. And this probably would be the collapse of currencies, but $3,100 would be our minimum measure move of the cup and handle on gold. So that could be pretty epic. Still only like 50% though, but you know, gold is like sound money and not supposed to be like volatile. It's supposed to be like strong and reliable. So, but still identified this area. We broke down from the 236 of that low down here at 1,000. So when we broke down from it, I expect us to come back up, potentially retest the 236 range. That was our clear support, clear resistance back here. I would expect it to act as resistance again, stay inside this channel longer. You'll see we've obviously been operating inside this channel other than that little fake out breakout right there or failed breakout. We are now below this red trend line. Oops. Below the red trend line, below the green dotted heart line of the channel, and then obviously below the 236 key fib level as well. And then if we turn on our moving averages, we are clearly below the 8 and 21 cross right here as well. So again, if this gets rejected, I would expect continuation back down to our first main target on gold, which is like the $1,600 range, followed by the 0.5 target back at like the $1,500 range. And then last but not least, the absolute best potential target possible is this blue, very long trending line that goes back to 2015. That's our bottom. That's our bottom. And then potentially our bottom here again, which is also the top of our technical breakout at 1,300. Do I think it's likely we'll get down to the 618? No. But is it possible? Yes. And that's what I'm paying attention to. And if you're buying physical gold, you're never going to get it for around that price anyway, because the premiums will probably be ridiculous. They're already still like fairly expensive. So, but the key area we're looking for now is that 1,600, potentially the 1,500. But it is possible, somewhat likely, that we do find support right here and break through this area and get a push back up at least to the bottom of the either the bottom of this support at like 1769 or the top of the channel and this previous like green support breakdown that we came from, you know, somewhere in like the $1,800 range. But again, I would expect this consolidation pattern to continue to take place until it doesn't. We're going to break out of this thing, get a confirmed breakout and continuation one time. And until we get that, we're going to operate inside the channel. It's going to continue to operate inside the channel until we don't. Silver, nothing has changed. Everybody's mad at me because I'm a huge silver bull, but I've been hurting their feelings. The truth is we're inside of a sideways consolidation. It's more bullish than gold, but it's still not bullish. We're going sideways inside of a range. Top of the range is our top right here at $30. Bottom of the range is $22. We have come top of the range, bottom of the range, bottom of the range, bottom of the range, all the way back up to the top of the range. Silver squeeze potential breakout failed. We did get the breakout of the purple descending trend line, opposite of the trend to the upside. Came back down, found support, continuation, hit the top of the channel, hit the measured move. No reason to be in a position after that, because you should have been smart enough to know to sell resistance by support, at which point in time we have sold off, showed weakness, showed weakness, showed weakness. Here we are at the bottom area and next support area, less than $25, at which point in time I expect us to break down to $24 or potentially as low as like $22.50. Silver, once again, showing weakness but stronger than gold. And just a quick little update in case you don't believe that I'm an overall bull on silver. This is my long-term chart. I finally hear people talking about this now. I'm not saying that I invented this, but look at this massive cup and handle pattern. I've never seen anybody talk about it until after I did and started broadcasting it. December 1979, all-time high, $48. April 2011, same high, $50. So we have a massive arcing pattern double top, followed by a descending channel sell-off, followed by a rounding position that does not take out more than 50% of this. So we have a cup, we have a channel forming our handle, we have a technical breakout of the pattern, and I would expect eventually continuation up to $50. After we get that continuation up to $50, the measured move of silver, this, and again, it's because it's on log scale, the arrow changes sizes, but that is from the bottom of the cup to the top of the cup or neckline, or, you know, basically like confirmed breakout area. That will take us up to our 1.382 of this previous sell-off from the top to the bottom right here. 1.382 sell-off is going to put us at $92. So $92 is my initial target. And then again, if we take a Fibonacci extension target from the top of the pattern at $50 to the bottom of the pattern, which we bottomed out back in 91 at like $4, we can look at our Fibonacci extension targets, and you'll notice that the initial 1.236 target is going to be at $90. So again, that lines up perfectly with our cup and handle technical breakout, followed by our 1.5 target is $179, and then our 1.618 target is $250. But the overall potential target to the upside that I would be expecting eventually to take place is up over $500. Sounds crazy right now, but I think it's very likely to happen eventually. But again, this is a 40-year pattern, so don't get too bullish just yet, because it might be another 20 years before that happens. So, but that is silver. And just like I said too, with goldandsilver.com and those 1,000-ounce kilo bars, you know, I think the premium on those has come down to like $2. Thanks to Mike Maloney, great influencer. Also not in a cult. He likes gold, he likes silver, he likes crypto. That's an intelligent man, because he didn't just join one cult and try to convince everybody why it's the best cult. He is a smart, diversified asset investor. So if you haven't watched his videos, Mike Maloney, he also has some great books, audio books that he gives away for free, and then also is a owner, investor, whatever, in goldsilver.com. So helping to bring down the premiums from what was like $10 down to like basically $2 digital, or like storage on the vault to like $4 or $5. So basically just arbitraging the COMEX, like I said somebody was going to do, and then he did it and is succeeding. So UEC, Uranium Energy Corp. You know, obviously I am massively bullish on uranium. Just what we said has been happening. Put in that bottom back here at like 35 cents or whatever back in March. Got our one measure move up to like $1.23. Got our two sell off back down to 80 cents. And then we just now topped out with the top of the three, excuse me, at $3.69. Went parabolic. I told you I was getting out of my position in here. I did not get out at the top. I got out here about like, I think it was like $3.20 or $3. I can't remember exactly, but obviously very profitable. In an overall uptrend, I'm extremely bullish on uranium. One, because it is extremely important for our future, because we need nuclear energy, because all this other stuff is not developed yet, not sustainable, and nuclear energy is. It has a very bad like stigma to it, but it's the future. Also, uranium takes forever to like get new mines online, get approved, like, you know, approval, like licensing. Takes years and years to build like nuclear power plants. Like, it's not just going to happen overnight. So when this thing entered into a daily or weekly uptrend, you know, I expect that uptrend to last between like 6 and 20 years, which is like a typical commodity bull cycle. So I am extremely bullish on uranium, and the price has barely started to move. We are far from all-time highs on uranium. So like uranium, silver, and oil are three extremely bullish commodities in my opinion, because they're not even close to all-time highs, and they're all extremely necessary for our future and expansion and development of infrastructure, energy, and like basically like the future of human man existence. So I think it's very likely this thing will continue to sell off after that strong rejection at the 821. We could potentially start to find support here soon, but everybody knows my target to the downside is the 382 or the 618 of the red macro from the top area there. But I'm essentially looking for buys in this range. I thought I had a little buy box in place, but I'm essentially looking to get my buys in here around like where I have that theoretical 4 in place. Somewhere around $2 I'm hoping to get this for. It might not get that low, but I'm laddering in along the way, because the upside potential on this thing is like absolutely, like, without even taking out the previous all-time high way back here. And then the previous high before that is that one I have way back there. You can't even see it on the daily. It was like $8 to $10. So even if we get basically the Elliott wave structure, 1, 2, 3, 4 pulls back, nowhere even close to the 1, extremely bullish, continuation to the upside. I would expect us to get at least back up to the 886, so 593. So even if you bought right now, or I bought right now, you're looking at like a 2.5x. But if we can get in at $2 and it goes back between like $6 and $8, that's easily like a 3 or 4x, 300 or 400%. So can't beat that. Extremely bullish on this thing. But this little consolidation sell-off, you know, this is long-term stuff right here. Long-term bull market. It's not going to happen overnight. So I would expect this thing to kind of just drag out and go sideways for a while. But UEC, here is uranium. This is the mining ETF. So this is like ETF based on uranium miners. same type of situation, you know, put in the 1, the 2. This, I think, was potentially the top of the 3, at which point in time I would expect us to come back down. I have fibbed from the top of the 1 right here. So if this is our 2, or I'm sorry, if this was our 2 down correction and this is our 3 up, I would expect our 4 to probably come down somewhere between like 45 and like $40. So I'm looking to get back into this thing at much lower prices, but I think we've definitely topped out. I was expecting us to get just slightly higher up to the 2.618 Fibonacci extension at like $66. But once we started showing weakness right here, took out this little top and put in some divergence, it looked like we were putting in a topping pattern here. We had the top right here in blue. We have the lower high right here and rejection of the bullish control zone. We have the top right here and price action. We have a higher high here. That's bearish divergence. And then same thing here on the TJD Traders Dynamic MACD. The TDMACD had a high here at this point and a much lower high here at this point. We have a red slope. And, you know, once again, that's clearly divergence. So I expect this thing to continue selling off, at which point in time I'll be looking for re-entries. But probably, you know, again, we'll see how this plays out. This thing's going to move slow. And I would expect at some point in time, like uranium's actual price to move along the way. But I'm probably looking to get into this, like, I don't want to put too broad of a range, but, you know, I'm looking for somewhere around like this previous top area right there, around like the 382, somewhere in there, but potentially could get as low as like $40. So we'll pay attention, see how that plays out. If you're just tuning into, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Feel free to go back and look at our traditional market indexes, cryptocurrencies, and then also we are obviously doing commodities now, and we'll do some tech and a couple individual stocks as well after this. So now we got First Majestic, silver mining company. You know, same thing. I think we're in the middle of a 4 correction. Put in our top at 1, put in our bottom at 2. Got extremely bullish on this thing once we're above the 200 exponential and simple moving averages. Angled to the upside. Got out of my... I did not expect that silver short squeeze to come in. So I did take profits before I needed to on this bad boy. But it absolutely blew up to like $24. I got out, I want to say like 22 bucks, somewhere around there. Waiting to, I still have a little bit, but nothing substantial. Waiting for this to finish off. We're almost back down to, you know, where we're looking to buy at. But again, this just looks like a descending triangle. We have a high, we have a low, we have a lower high, we have the same low, we have another lower high, we have now the same low again. We could potentially pop back up one more time, get rejected by the 382, but you know, we got the 821 cross, we got rejected. I'm expecting this thing to sell off. Let's hope it does not get the measure move sell off, because that will invalidate our structure. I don't want to see it come down any lower than the 1 right here. But if we zoom out to like our monthly chart here, you'll notice we're in a giant flag pattern, a giant, you know, wedge. And we have a bottom here, a top here, a bottom here, a top here, a bottom here, a top here. This goes all the way back, this wedge pattern, to 2008. And you will notice that the 1 was at the top of the pattern. The 2 is our retracement. The 3 was a confirmed breakout of the pattern. And then the 4, what I'm expecting is a retracement back to the top of the 1. And also to find support on the long trending resistance line. So that to me would be an SR flip, at which point in time, this is my key buying area where I would absolutely love to get into this thing. Anywhere between $13 and $15, which we're basically there now. 13 and 14.45. We're basically at my target now. So I'm going to just start buying into this thing when I start to see like some strength coming in, or just buying a little here and there as we go. But I'm expecting us to basically find support and get continuation. And this should line up, you know, in the next like few weeks or months, or who knows, even days, with like a technical breakout on silver as well. So, but again, this is a long-term 2008 chart. So it could chop along here and just go sideways before we hit our targets for like another month. Who knows? It could be a year. I doubt it, but so that is First Majestic, AG. Next is American Gold and Silver Corp. Again, you know, this thing is chopping along here, showing quite a bit of weakness. I told you I was expecting it to roll over, but I'm looking to get back into this at like $2. I'd like to get it at $2. You know, I told you I got out of this thing a while ago. You know, multiple lower highs. We're below the moving averages. What I don't want to see happen on this is what happened on gold. I do not want to see this 200 exponential and simple average moving average rolling over. They are currently doing that, showing extreme weakness and potentially entering back into a bear market. So we basically have like our 200 exponential and simple just going sideways. We could easily stab down below here, hit my target at like $2, and then find support and then enter a long-term bull market. But I don't want to see it show too much weakness. Next we have Caterpillar. I'm extremely bullish on this, but like I said, I was expecting a short-term pullback, which we are currently getting. We obviously got bearish divergence. We have a high here on our indicator oscillators. We have a high here on price action. We have a lower high here on the indicator oscillators. We have a higher high on price action. I told you we were going to sell back off to the 21 and see if we could get back above the 8 and stop this cross from happening. We had a cross here. We stopped across here. We stopped across here. We've had quite a few times on this thing. I got bullish on Caterpillar back at $128. It's not going to move like cryptos and stocks move, but fundamentally for like infrastructure and what I potentially think is going to be like, a commodity bull market, infrastructure, clean energy, all this stuff relies on like heavy equipment. And who builds the heavy equipment? Caterpillar. So if you believe in America, if you believe in infrastructure, if you believe in energy, if you believe in the development of the United States as a whole and many other countries around the world, this is what you want to bet on. It's also one of the most bullish charts in existence right now. Even though the percentage moves aren't as big, it is still crushing way above its moving averages. At this point in time, though, could easily get rejected and come back down to one of these key levels. Assuming that was our top here, we could potentially get down to like $188, but I'll be laddering back into this thing when it starts to like round back off and show strength to the upside. But fundamentally and technically, I am extremely bullish on Caterpillar. Next, let's do our pot stocks, cannabis. All right, so Aurora Cannabis. I'm just going to do a brief one. I'm not going to go into the whole big thing on this, but you guys know I basically said we need to be getting out of this position between $13 and $19. It obviously got that beautiful squeeze. I expected us to obviously take out this high right here. It's the least bullish of all the pot stocks. We got above the 200 exponential and 200 simple, or of the main ones. But look, we sold off massively, almost back down to the 0.5 already. We now have the 200 exponential still in a downtrend rolling over, and the 200 simple had rolled back over to the upside and was potentially strengthening, and now we're back below it again, and it's curved back to the downside. So what could have been a daily uptrend on Aurora Cannabis is looking more and more like a daily downtrend. Now, what I'm paying attention to and what I want to see happen is this inverted head and shoulders. And I know it did not seem like it was possible back here at $13, but now here we are below $9. And now look, we have a neckline here at $20. Here we have resistance and support. Here we have resistance. Here we have resistance. We have a left shoulder potential stab down here at $5. Up to the neck. Down and put in a head at $4. Up to the neck at $20, 18, 19, 20, whatever. And then now look, we are rolling over again, and we are almost back down to my target of, roughly between like $5 and $7. So this is where I'm looking to buy around the 0.5 retracement or 0.618 retracement, anywhere between, like $6 and $8. I'm looking to heavily accumulate Aurora Cannabis. I think these Canadian cannabis stocks are going to absolutely blow up as, the United States essentially legalizes or decriminalizes pot stocks. And because they're not legal in the United States, American companies cannot get listed on the American Stock Exchange. So what do people buy? Canadian. So here we have these also topped out way before. These topped out at the beginning of 2018 and have been in like strong bear markets all through the runs in the S&P and all the traditional markets. This cannabis sector was getting absolutely crushed. So this has been a bear market forever. So if we do get the confirmed breakout back above these areas, if we do get that inverted head and shoulders, this thing has massive potential. If we can get our buys down here at $6.75, even with a quote unquote 27% soft stop loss, we are looking at a 377% move back to the upside. That is like over a 14-to-1 risk reward ratio. And all that is basically from our right shoulder to the measured move of our head and shoulders pattern, which again, you'll see is from the head down here to the neckline here. So, that's life changing. 14x You could put $100 in this, you have 1,400. You put 1,000 in this, you have 14,000. You put 1,000 in this, or more than 1,000 in this, and you can retire. But again, this could take a couple years. Also, this is the weakest of the pot stocks, and this is not financial advice, obviously. Tilray, much more bullish. Probably my favorite of the pot stocks. Looks like we have bottom back out here at 250. You'll notice we had a 1, a 2 retracement, put in a 3 parabolic. I got out of my position back here at $50 and started reaccumulating. But again, I'm looking for this 4 to come back down to the top of the 1 and put in, a 1, 2, 3, 4 bullish retracement, not take that out, and then get our Elliott wave structure 5 and also our Fibonacci extensions. I'm looking for a purchase anywhere around like $15 to potentially as low as like $12. But you'll see here the exponential and simple moving averages are very strongly in an uptrend to the upside. So we are in a bull market on Tilray and the majority of cannabis stocks. And we're at the beginning. This is the weekly cross on the 821 to the upside. This is the weekly cross to the downside. So this was in a bear market from February 2019 until our confirmed bull market in November of 2020. So I would expect this next bull market to last again for like 5 to 15 years in this thing. A lot can change in that time. But if we get the Fibonacci extension and come back up and potentially take out our all-time high, our first target is all the way up here at $112 for our wave 5, followed by our next target at $288 for our wave 5 Fibonacci extension. And then finally, we take out the all-time high and, 2.618 Fibonacci extension, or 1.236 of the entire move from the top to the bottom. It's over $1,000. So our initial 603% potential upside, 1,800% on our second trade, and 6,737% on our upside for the next one. If you put $100 into this thing, you will be retired. If you put 1,000 into this thing, you will have people working for you and probably a hot trophy wife. Not financial advice, not your financial advisor. I do not endorse marijuana, THC, pot stocks, edibles, but I do endorse getting rich. So this has one of the best charts possible. Could we sell off here and die and this thing goes to zero? Yeah, maybe, but I doubt it. Now let's look at Lemonade. This did exactly what I said too. We needed to find support. Lemonade hit that bottom right here, entered an uptrend, was in a strong uptrend. We had a touch right there. We had a touch right there. We got that reflex rally bounce. This thing is getting absolutely crushed. This is part of why, I feel bad for Meet Kevin. He was hardcore pushing this thing. He probably crushed all his subscribers with over 50% loss. This is where we needed to find support. It's going to go back to the upside. There was key resistance here, broke through it. You expected to find support. It bounced, and now here it is broken down from this trend line and got a daily close below it. If this thing loses this trend line and does not just get like a gap up, and then continuation to the upside, I would expect it to come down as low as it's at the 618, $76. So if it comes back down, $67 is the next target, and then after that, bankruptcy. Maybe not bankruptcy, but it doesn't look good. Lemonade looks like death. If you still own this thing, I feel bad for you. And it should further just stress why technical analysis is so important. So that's it for our commodities. I'm going to take a look at chat, interact with you guys for a second. If anybody has any questions or anything. More than a year. Yeah, ETH to Bitcoin. Okay, here's the thing about ETH to Bitcoin, man. I don't really chart bullish asset against another bullish asset. And the reason I don't do that is there's no reason to chart ETH to Bitcoin. Because why do you want to trade a bullish asset against another bullish asset? It makes way more sense to trade a bullish asset against a bearish asset. So if cryptocurrency is bullish, you want to trade it against a bearish asset. So the dollar is bearish right now. Regular currencies are bearish right now. Cryptos are bullish right now. So there's no reason whatsoever in a bull market with crypto to trade a crypto against another crypto. Now, I can look at the chart for you if you want, but again, if you're on an exchange where you have potential to trade basically like ETH to Bitcoin, there's no reason to be doing that. You should be trading ETH to dollars or Bitcoin to dollars or whatever your currency is. There's no reason to do it because all you're doing when you bet on a pair like that, you're betting that Bitcoin is going to go up faster than the dollar. Does that seem likely? Yes, because the dollar has been going down all year and Bitcoin has gone up like 5x in the last year. Meanwhile, Ethereum, if you're trading ETH to Bitcoin, you're betting that Ethereum is going to go up, but Bitcoin is also going up, but Ethereum is going to go up faster than Bitcoin. So why do you want to try to pick the fastest horse in a race when you're picking between ETH or Bitcoin to see which one's going to go up faster? You're losing so much gains versus if you just trade ETH to dollars because the dollar is basically going sideways or down while Ethereum goes parabolic. Instead of picking two parabolic assets and trying to trade them against each other, pick one parabolic asset and one flat asset and just trade to like a currency pair. But again, if you want me to, I will. And I recognize your name, Supernova, and I do appreciate you, man. I remember you've been around for a while. I hope you're doing well, man. How you been liking the live streams in comparison to just like the static videos? Hope you've been enjoying like the extra time and everything. And I like the interaction of them as well, so. But again, I mean, if you want me to, I will look at that, but I don't see any reason to trade it. And I know people are talking about, a potential breakout of Ethereum in relation to Bitcoin, but there's no real reason. Jason, look at OGI. Yeah, I can look at that. What is OGI? Is that a crypto? I can't even think. There's so many things now. And what do you want it? Specific exchange or to dollars? But yeah, I'll pull up those two charts and then what is that? Organogram Holdings? Is that what it is? Yeah, it's got to be. I will pull up those two charts for you guys and then we'll go into tech. I got a couple things on the list, like always. I was gonna look at the ARC funds as well, so okay, yeah, that's what I got. Okay, so let's do what did I do? To the euro? You said to the dollar, didn't you? Or no, wait. You said ETH to Bitcoin. I think I just clicked the wrong one. Looking for the one for Bitstamp because it's got a long chart. We'll just do Bitfinex. That'll work. They've been around for a while. Okay, so let me pull those up here. So ETH to Bitcoin, and then I got that OGI as well. We'll do next. So, all right, so ETH to Bitcoin. Let's zoom way out on this thing. I know there's a massive pattern taking place, and everybody's trying to pitch, why Ethereum's going to be so good. But you basically have like that all-time top in the previous 2017 bull market, and then we came up and put in like that lower high right here, and then everybody's just trying to say basically there's a massive pattern getting ready to break out. If you go from the wicks, I'm on the monthly here. If you go from the wicks right here though, that's depending if you're what time frame you're on, and if you're going from wicks or bodies, that's basically what you're looking at. So we basically had a top, got rejected, and drew this trend line in place, and now here we are getting rejected again and coming back down. We have flipped the 821 on the monthly to the upside, tried to enter a uptrend, showing that like Ethereum is going to be gaining on Bitcoin because all it's been doing since 2017 is losing value in relation to Bitcoin. but you will notice very clearly, we got rejected very powerfully right here, took out over half of that candle, and now this sell-off taking place now with like about a week left in the monthly candle is back below the 821. We have lost strength, powerful knife stab up, powerful knife stab up, and now we're losing strength. The stochastics are getting ready to cross back to the downside. So on the monthly, everybody's extremely bullish, talking about $20,000 Ethereum. How about no, Scott? How about no? So there's our pattern again. What does it look like? It looks like we're going to continue to operate inside this pattern until we don't. So what I'm paying attention to is this is our key resistance line here in red. This is our key support line here in blue. And if you don't see already more reason to be trading this in relation to dollars rather than Bitcoin, you're looking at the wrong chart, my man. Definitely do not want to trade this to Bitcoin. Now, if you're deciding, do you want to be in Bitcoin or Ethereum, you could argue that we were in basically this pattern and that this makes you think you want to get bullish on Ethereum, is that we're operating inside of like this channel or this wedge. But what's really happening on the macro? People don't look at this. On the macro, all Ethereum is doing is dying in relation to Bitcoin. It's getting worse and worse and worse. Bitcoin is going up, Ethereum is going up, but Bitcoin is going up faster. Or Bitcoin is going down, Ethereum is going down, but Ethereum is going down faster. So Ethereum has consistently, since 2017, been losing value in relation to Bitcoin. Everybody got bullish and said, I'm moving out of Ethereum into out of Bitcoin into Ethereum. Ethereum's going to take over Bitcoin. The flippening is going to happen. How about no? How about this is a bullish retracement of a bearish dump? Ethereum lost from its all-time high to its low right here. Ethereum lost 89% of its value in relation to Bitcoin. So it's down 89%. If you held Bitcoin versus if you held Ethereum, you lost 89% of your value for holding Ethereum instead of Bitcoin. It then went up 183%. So if you bought back into Ethereum at the bottom and then rode it back up, it went up 183%. So you're able to capture up to double your Bitcoin value in Ethereum. But now here we are at the top of the range again. So what do you do at the top of the range? You sell back into Bitcoin and then you accumulate Ethereum again at its next low or whatever. Like in my opinion, that's what you do. Because look, even though we're up 183%, it's still a micro retracement. If you look at the overall percent that you're down on Ethereum because you held it instead of Bitcoin, you're still down 70%. You are still massively down by holding Ethereum when you should have been holding Bitcoin. So once again, further showing that altcoins are trash in comparison to Bitcoin. No matter how strong they are and how good they are, they're still trash compared to Bitcoin. So, but yeah, this is an overall downtrend on Ethereum that's been taking place for what, 2017? So like 3 or 4 years overall downtrend. So until we break out of this pattern, I cannot get bullish on Ethereum in relation to Bitcoin, regardless of what happens. So say we came back up right here and we broke out to the upside though, what's really going to happen? Ethereum's just going to go back up to like 0.09, like 10% of a Bitcoin, but it's still a micro retracement. It's still an internal retracement of this overall move. So until we get back above 0.15, so like 15%, Ethereum being worth 15% of a Bitcoin, I will never tell people that you're better off holding Ethereum than Bitcoin long term. You can obviously capture moves like this off of the bottom of a range and be profitable off of a double bottom. Like everybody knows I bought Ethereum at like $80 to $90. I accumulated a ton of Ethereum. But everybody also knows that I sold almost all my Ethereum between $1,600 and $2,000 because it's not Bitcoin. If you're in crypto, Bitcoin is the way to go, especially long term. Inside of that though, there are alt runs and rallies and everything. But until we, at least on the weekly, get above the 200 exponential and simple, long term, there's no reason to be holding Ethereum instead of holding Bitcoin. Now, if we break out, get back above, find support, retest, and then start to get continuation, by all means, I'll be the first one to tell you to hold Ethereum instead of Bitcoin. And again, it's not financial advice. I'm just telling you what and why, and also why I would much rather trade Ethereum or Bitcoin against the dollar than against each other. So, but again, this just tells you, do I want to hold Ethereum or do I want to hold Bitcoin long term? It should be very obvious after that little rant. You want to hold Bitcoin. And you can see now we were in an uptrend basically on the TJD TDMACD. This flipped over blue back here at like the 0.02 range and told you want to be in this, the long trending trade to the upside. We got the bearish control zone hard buy, and then since then we got the hard sell here, came up slightly higher, still have the blue slope line, but now here, look at this. When you zoom in close, we have lost the slope line for the first time since we gained it. So I would expect Ethereum to break out of this micro pattern right here, this ascending wedge, to the downside. So I think it's much more likely that Ethereum is going to get absolutely shellacked in comparison to Bitcoin. It's going to get absolutely wrecked. All the people that sold their Ethereum or Bitcoin and bought Ethereum are going to be crying when we're all the way back down here at a lower low in relation to Bitcoin. So what would cause this to happen? Either Ethereum sells off violently and Bitcoin sells off less violently, or Ethereum goes up and Bitcoin goes up faster, or Ethereum goes down and Bitcoin goes up. Any one of those three scenarios will result in the more likely measured move back down to the bottom of this long descending pattern. So there is ETH to Bitcoin. And then next, OGI. Okay, look, so we got the daily chart right here, and you'll notice that, like I always say, once we're in a very long bear market on this thing we essentially entered a bear market on this asset in August of 2019. We now are on the daily, entered a bull market in this asset, back above the 200 exponential and simple with a positive slope to the upside, right around $1.91. So $1.91 is when you should have gotten like bullish on this thing. And if you did, you had potentially 238% to the upside, went up as high as $6.51, at which point in time it had a massive capitulation event. When it sold back off, though, found support at a key level right at our 377 and 528, the gray and white moving averages here. Did not close below either one of them, came up and put in a lower high. So it looks like we are inside of a micro retracement in an overall bullish move. Looks like there's potential. I'm not sure what this is, to tell you the truth, like what it actually is, but it essentially looks like there's potential for something like this to be taking place, where you're going to have even a potentially, I wouldn't expect the low to come down any lower than it did here at like 250, but there's probably a high likelihood that you're going to be coming back up here for some kind of like internal retracement of the bearish dump there. But I would expect, let's put a Fibonacci extension on this thing. So if we take a Fibonacci extension from the top of the 1 to the bottom of the 2, all right, look at that perfect touch. Wow, that's beautiful. This is why you use Fibonacci and extensions. From the top of the 1 to the bottom of the 2. Let me brighten this up because I'm not sure. I know a lot of people watch on their phones. I'm going to turn it white for a second. From the top of the 1 to the bottom of the 2, we got an exact Fibonacci extension target, which is my number one target, is the 2.618 Fibonacci extension. 2.618 times the measure move of the retracement. So that took us up to our exact topping pattern. We came down on the potential for exactly 2 key moving averages and just above the 1. So now, assuming that that was our bottom right here, which we don't know yet, we'll have to see, does this put in a higher low or a lower low? We do not want to see it come down any lower than $2.17. If it does, it could potentially invalidate our pattern. But in the event that that was in fact our top here of the 3, and that was in fact our bottom here of the 4, we can look at our next Fibonacci extension for the 0.5. And you'll notice that if we get back up to even the 1.618 of the 0.5, which is a viable target, it lines up almost perfectly with the 3.618 extension of the 1 to 2 retracement. That would be $12.25 to $12.45. That is a massive move. You're looking at basically like 400%. In the event that we get the full 2.618 extension, which is much less likely because it's wave 5 usually is not longer. That would be an all-time high, it looks like, for this thing, that wave 5 1.618. But we could potentially get a move up to like $35. So if you were entering a long position on this thing and you were able to get in even now at $3.50, you're looking at a potential 10x move to the upside. So even a modest without getting too crazy, let's say it comes back down to like roughly this area right here, and you assume that if we take out that previous low, you're going to get bearish and invalidate this 1, and obviously you don't want to put a hard stop in here, but that's like a 36% stop loss to the downside with a potential upside move. Let's just say the 1.618. That's a 333% risk reward ratio. So a 10x. Or if you got all the way back up, potentially our second target, basically. And again, I wouldn't put a hard stop in place. I would be accumulating this as long as it appeared to be bullish and remain bullish. The 2.618 Fibonacci extension with a 30% soft stop loss. That's a 1,000% move to the upside. So that is a risk reward ratio of 28 to 1. So a potential 28 to 1 risk reward ratio. I'll take anything over a 2 to 1. So that's probably one of the best trades you'll ever find if you get lucky enough to get down to that level, at which point in time I would expect the 200 simple and exponential moving average to basically line up with the 377 and 528 right around that area. So if you're already in this thing from, when it flipped over bullish and you didn't sell, it looks great. I would definitely stay in it. Not financial advice, but also I would be looking to basically accumulate this thing. I mean, anywhere from where it's at now to slightly lower. And I really wouldn't get worried until it came down below $2. So, but again, I wouldn't want to run a hard stop on this thing either, because you could get cleaned out real quick. And again, I have no idea what this is. I'm just going by technicals. So fundamentally, it might be total trash, or it might be amazing. Judging by the chart, though, it looks like it's probably amazing, whatever the hell it is. So. Yeah, definitely. Oh, no, for sure. Yeah, Supernova. I did not mean to hate on you or anything. That's the best way to use the Bitcoin chart in relation to other assets is to accumulate more Bitcoin. I also look at Bitcoin dominance all the time as well. For sure, Jason. No problem, man. Anytime. It's good to have you back, man. I hope I'm going to be seeing more of you lately. Same with you, Supernova. I feel like I haven't seen you for a while. So obviously the live streams are helping to bring back some of the old schools. Or maybe you guys just been silently in the background regardless. It's good to have you guys. But yeah, I mean, it's definitely the way to use it right there, honestly. But I mean, the truth is, I always prefer to chart things against a strong asset to a weak asset if I can use that as a trading pair, because you're just much more profitable. But Ethereum does not look good in relation to Bitcoin. The best trade in Ethereum was already had, in my opinion, until we see a technical breakout over like 2000, and then I'll probably get bullish on it again. But again, judging by the chart, I'll probably be more bullish on Bitcoin because it looks more likely it's going to sell off than go up. So let's look at Tesla next. We're going to go into our tech sector. I told everybody about the top at 900. If you didn't believe me, the 821 cross, I put that short position into trade or into play. To anybody who took that trade at $823, Tesla has been massively selling off since then. Or if you just hedged, it came down 34%. It's currently down 23%. As soon as we bounced that 0.5, this is the Fibonacci of the previous sell-off back here at $335 up to $900. That's our white Fibonacci that we have in play. As soon as we sold back off to the 0.5, we bounced to 382 the first time, put in a clear lower high, sold off to the 0.5, came back up, put in another clear lower high. So we have a high, we have a low, we have a lower high. It looks like an A, a B, and then we're going to get a C. I would expect the C to at least come down to the 618 200 exponential and simple moving averages. But just like I said, this to me was a reflex rally front run of the 200 exponential and simple moving averages. I expect this thing to potentially come back. This is our massive 1, 2, 3, 4 going all the way back to May of 2019 when Tesla was like $40. I expect this to potentially retrace this entire Fibonacci structure, or at least the structure from $70 up to $900, at which point in time, I could essentially see this thing coming as low as $250. Now, am I going to wait? No, there's going to be some nice moves along the way, but is it possible that was just an A, a B, and then we get back down here to $250? Yep. When would I get worried? If Tesla goes below $200, I'd be extremely, extremely worried. When would I get greedy? Anywhere in this green box area right here, below $340, down to like $250, I will get greedy on this thing. But in the meantime, we basically, anybody that's been watching already knows we hit the top of my first target, the front run of that, at which point in time I left my short position hedge. And then, basically waiting for it to come back down. I expect Tesla to come back down and retest the 618 at 479 to like 446. So somewhere in this range right here, I'm expecting to be able to get buys in. But if this is a massive 1, 2, 3, 4, and we do come back down, anywhere in like this 250 to 350 range, the Fibonacci extension target for Tesla for the measure move 5 is at, and it sounds crazy, but it's at $9,000. Now, how long is it going to take to get to $9,000? I mean, this could be 2 years, 3 years, 5 years, 10 years, 20 years. But I really do believe that Tesla is like a, life-changing trade still. But again, do you want to suffer another 30 to 50% drawdown and just go all in right now at $630? Or do you want to get in at $350 and ride it out to 9,000? I mean, who cares really in the long run, but I would rather get it at like $300 or $400 and I'll ride it to 9,000. So, or maybe Tesla just dies and Elon Musk goes to jail and the chart fails and that was it. But I doubt it. I think Tesla's going to crush everyone. Electric vehicle market, clean energy, batteries, all kind of stuff. I'm very bullish on Tesla. I think, rocket ships, all that stuff, SpaceX, anything to do with the Elon Musk except for Doggy Coin is pretty much a good idea. Although, in my opinion, if Elon Musk was so damn smart, instead of putting $1.4 billion of his balance sheet in Bitcoin like a idiot speculator, he would have put $1.4 billion of his balance sheet into physical silver, because the price is probably going to go way up over time, and he doesn't need Bitcoin for anything. He's not using Bitcoin for anything. He can accept Bitcoin for his products without having Bitcoin. He doesn't have to make change for people in Bitcoin. He does, however, need physical silver to build things like cars, like batteries, like solar panels. So to me, it makes more sense to put $1.4 billion in silver, not in Bitcoin. But who knows? Elon Musk has more money than me. He's obviously like the richest man alive, and he's definitely smarter than me. But I don't know. He does tweet a lot about Dogecoin, so maybe he's not smarter than me. Maybe he's just got a couple great ideas. No, seriously though, he's a genius. But all right, so that's Tesla. Let's look at NIO next. NIO doing exactly what I said. Sold off here from the top, getting absolutely crushed. Reflex rally off the 200 exponential. I told you we're getting rejected here. Can't get the cross back to the upside. We sold back off straight back down too. I mean, this was a great place to take a long. Like I said, you made 30% if you sold back at the rejection of the 89, like I said. And then now here we are down another 20% since then. We could easily bounce right here and double bottom and get continuation. This is a very strong support area. And we have our 200 exponential simple moving averages. Or we'd come back down here like 377.528. We'd come back down to like $26 or like $20. Would not put that past NIO right now. NIO looks very likely headed down to like $26. I'll be a buyer for sure at $26 or $14. But let's remember this thing was almost bankrupt. Came down to $1 not too long ago. September 2019, NIO was $1. So $64, basically like 50x'd. Let's not get too greedy on this thing. Could NIO come back down to like $15 or $9? Yeah. Let's not get too greedy on this thing. I'm going to wait for NIO to show strength. I'll wait for the 821 cross back to the upside. Right now, it looks like it's getting ready to waterfall. And my first waterfall target is $26. I'll probably scalp that. I'll probably scalp either this double bottom at 31 or 26. But again, this thing could come at your account like a wrecking ball. Alibaba. Okay, so we spoke about this one specifically. And again, I feel like, man, you guys must get annoyed by me just saying, like I told you, like I told you, like I told you. But these markets are so predictable right now. They're literally doing everything exactly to a T. We have that bottom support here at 129. Support, 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 support. That's our green trend line that I have drawn in place on Alibaba. And exactly what I said happened. We bounced it perfectly the first time, came up, to a lower high. We have this red resistance line in place now. So we have a top here at 319. We have a bottom here at 210. We have a top here at 274. And now here we're trying to base out off of the 377 and the 528 and that green trending support line. We could easily bounce this back up to the top at 251. But if we bounce back to the top and don't get a confirmed breakout of this red trend line, it's going to look like a rejection off of the 200 exponential here in blue and the 200 simple here in blue. And it's going to look like Alibaba is entering back into a bear market. So we entered back into a bull market after that level 1 retracement back down to $128. We got back into our bull market here at 170, ran all the way back up to 320. And now here it's going to look like we're about to go back into a bear market. If we do, I would expect us to come down potentially as low as our 1 for our Elliott Wave massive structure. The Elliott Wave started back here at $58, topped out at $200. Then we put in the 2 retracement at 129. We put in the 3 top at 318. I would expect our pullback on the 4 to come down as low as, but no lower than the 1 here at like $200. I'm massively bullish. We almost hit it already. But I'm massively bullish at this level, basically, on Alibaba. I think it's great. You know, like, honestly, it's fundamentally extremely great. You know, if you don't mind China stuff, which I don't. I mean, I trade what's good and buy what's good. And I think China's got, you know, massive potential in the future. It has had massive potential for the future for the last 10 years. So I think the 5, based on Fibonacci extensions, potential target to the upside, it's like over $350 minimum. But honestly, if we look at from the 1 to the 2, and we take our Fibonacci extension from the 1 to the 2, our we hit over the 1.618 up to the 1.786. So our 3 hit the 1.786 at 319. So let's check out what the 1.786 is of this pullback. Again, assuming we topped out at the 3, assuming we make it down to our target at the 4, which we basically already did. We basically already hit it. But assuming we come back down and double bottom, if we make it to the 1.618 or the 1.786, that's going to put our Fibonacci extension target on the 5 up to like $400 to $450. If we make it to the 2.618 on a massive bullish 5 Fibonacci extension, we're talking about 625. So, I mean, you know, somewhere around here to even just a like modest target, assuming we don't come lower than the 1.618, you could, I mean, and this is not financial advice, but, you know, you could put a hard stop in place on this thing at, damn it, stop annoying me. You could put a hard stop in place at 16.8%, 17%, which I don't. I run tight stops. And you have a potential move just to a modest target of 100%. So 16% stop loss with 100% to the upside. So you're talking about over 6 to 1 ratio. So that's a pretty nice freaking trade right there. And then, you know, if we look at the real potential, like massive target up to 2.618, you're talking about 191% to the upside with a 16% stop loss. So again, you're talking about an 11 to 1 risk reward ratio. Alibaba has massive potential. I'm extremely bullish on this thing long term. It has a beautiful chart. You know, we'll have to see what happens right here. Don't want to see it enter another bear market consolidation. But last time that happened, you know, it sold back off pretty violently. But I do not want to see that happen again and take out that 4 on a longer time frame, because that's going to basically invalidate this structure to me. So structurally, that will look bad if it sells off too violently. I'm going to check out chat here real quick. Doge got to be paying him. Yeah, I don't know, man. I think part of Elon Musk just shills stuff because it's funny. Because he was trying to do it with Tesla and it wasn't working. And then he started just like shilling Doge with like his random tweets. And for a while it was working. And I think that's the only reason the price is still propped up as high as it is. But I think it rolls over and dies soon. Way back in the day, he like tweeted about Doge when it was worth nothing. And they were like, hey, if you want to be the official CEO of Doge, like, feel free, Elon Musk. And he was like, no, thank you. I was just fucking with you guys. That was back in like 2017 or something. Your predictions are extremely accurate. Thank you, brother. I mean, I use a very refined system that I have created over years of technical analysis using Fibonacci extensions, moving averages, and basically like fib retracements. I trade shorter time frames using those same things, as well as basically like stochastics and MACD, like modified indicators that I've created, and I give everything away for free. I'm a profitable trader. I don't have to come on here and shill random bullshit or whatever. I obviously appreciate people that throw crypto contributions my way or anything, but it's really not necessary. Honestly, I like the interactions more than anything, and that's really why I started this channel. Now, don't get me wrong, I'm a businessman, and obviously I'm all about multiple levels of income and passive income. But the fact of the matter is, the amount of time that I put into this channel over the last like 1 year plus, like I'll probably never get back that amount of time if I just worked on a different business or spent it trading crypto or whatever. But the fact of the matter is that like, if I just trade myself, I can only affect one person and make money myself. If I help other people to learn and teach and learn my system and use my indicators and help them to be profitable, we can all exponentially grow as a community. And I can teach people what actual technical analysis and like legitimate targets and fundamentals and trending moves and trades and scalps and uptrends and all this stuff. And it's exponentially more valuable to the human race than if I just like squander my information or like sell it to people. Don't get me wrong though, I probably will do a course. I've been working on the curriculum for an actual course, but I'm just not in like a huge hurry to like sell stuff to people. I would rather build up a community, and then in time, whatever. Once it becomes too big and I can't like directly reach people, I'll probably like sell a course or I may start the Discord group back up again. People have been really asking for it. But when I had Corona, man, I was feeling like crap all the time. Had a headache. It was way too much work for what it was worth. But again, I did enjoy it. I enjoyed interacting with people directly. Yeah, I'm very consistent, very honest, man, because that's what works. I mean, being bullish and saying Bitcoin's going to 300,000 is useless if you can't explain to me why. Because I'm a rational trader that uses actual technicals. I use technicals to trade, I use fundamentals to invest, and I use technicals and fundamentals for long trending trades that I invest in. And that's how you are profitable. Because the truth is, you'll never get stuck holding bags in something. If it's fundamentally strong, you'll never lose conviction in your purchases or in your investments. As opposed to if something has shitty fundamentals, but good technicals temporarily, and then you end up holding bags in it, eventually you might capitulate over time or by too much of the value dropping because you'll lose faith in it. And that's why most of these cryptos are shit. Yeah, TJD TDMACD is freaking phenomenal. Yeah, I mean these three indicators that I show off every time, the moving averages, my specific moving averages combined with, parabolic SAR and binary pivots absolutely crush it. And then obviously like the stochastics and the knife are amazing for long trending trades, but also for scalps. And then TJDMACD, Traders Dynamic MACD is great for like the final icing on the cake of recognizing like trending trades on any time frame. But that's the beauty of all these indicators is they work on anything from like a 15-minute to like a monthly. You really can't beat it. Neo crypto? Oh yeah, NIO versus NEO. Yeah, NEO is DEAD for sure. Yeah, dude, it's dead. Oh, I didn't. I gotta scroll down here a little bit. Hang on. Yeah, it's definitely dead. I think we looked at it not too long ago, and I was like, dude, I'd rather trade anything than this. I would rather trade marbles with little kids than Neo, the crypto. Litecoin, man, Litecoin's dead to me since Charlie dropped it. I used to like Litecoin and think it had potential, but since Charlie dropped it and it still hasn't made an all-time high yet, I've only traded it twice. I traded it from like $20, $20 range up to like 175. for like the breakout in like 20, basically led everything out of the bull market. But yeah, I sold most of my Litecoin well, all my Litecoin in 2017 at the top. I had one nice, beautiful like scalp, or I guess really it was more of like a swing trade from like 25 to 175. And then I took one more trade. I think it was like in the 50 or $60 range up to like 200. And I haven't touched it since. And I probably never will. Bought when it was like 13 bucks, Neo. Yeah, I mean, hopefully it doesn't die, but it's got some potential for a massive sell-off still. Sold on my Cardano when they were pennies. Oh, that sucks, man. Yeah, I mean, I bet you wish you had that right now. But even if you took that same money, and had it in Bitcoin, I'd be so much more confident. And to tell you the truth, man, I don't like Cardano. I think Charles Hoskinson's full of it. I think he's a bum, for many reasons, including him taking like, bailout money from the government when he's supposed to be like a decentralized cryptocurrency and all this. I think he's sold out, and I don't like sellouts. I don't like narcs, and I don't like sellouts. So as far as I'm concerned, old Charlie is a bum. But it is good. It's strong as of late. All-time highs. It's one of the more bullish looking cryptos, but it's still trash in my opinion. Thought someone hacked this account. Oh, his account. When he first tweeted Doge. Yeah, I know, right? That shit was so funny. Yeah, all these indicators are available for free in the description, man. Go on TradingView and just look them up. Yeah, email is, if you go to the channel page under like the details where it shows like how old the channel is and everything, my email's on there. But I mean, you can always hit me up in the comments or anything. But if it's something private or whatever you want to talk, you can hit me up by email. Just don't be surprised if I don't respond to you right away. Just leave me a comment saying check your email and I will. Enjoyed the Rona? No, it was absolutely terrible, man. I feel bad for anybody. I'm super healthy and like fit and in shape, and like I'm in my like late 30s. So like I'm in better shape than most. Uh Probably 99% of the population, and I felt like I was dying. My brother got extremely sick. I got extremely sick. Other family members had relatively small to no effects. I don't know why it affects some people more than others, but I was wheezing, could not breathe, could not sleep. I could barely like talk like 10 words without having to like catch my breath. I mean, it was crazy. And it lasted for like months on and off for me. It was terrible, man. Had headaches all the time. I was always tired. Yeah, I could do something like that, man. I actually have some stuff from my living course that basically does that. There's like a couple 2-hour live streams that I did for my Discord. If you search, you're not going to find them. But if you go to my, Jason, this is directed at you. If you go to my TJD indicator series under like my video playlist, you will find I actually posted up all my previous live streams that I did for my private group. Um, and in there, there's like some 2-hour, like in-depth explanations on how I talk about like entering trending trades, how I use my indicators, and then also like the indicator series itself specifically explains like the different indicators. But the ones I was just talking about for the Discord group, those are a little more relevant, a little more recent, up to date. Yeah, I'm gonna do the group again eventually, man. I've been kind of like reluctant and putting it off, just because I enjoy my freedom and I feel like a certain level of obligation to the group, I guess you could say. And this is sort of like these live streams are sort of like my cop out to not restarting the group, because then I can still give it to people for free. I can still provide like the same level of interactions, and then I get enjoyment out of the interactions as well. So I'm not just like trading by myself all the time, but like I don't feel an obligation because I'm charging people. But it makes more sense for me to have people pay for my time, because I like to think that I exponentially provide value, like specifically with my interactions. But I've been just working with a couple specific people that have been making like larger contributions, but getting like personal growth or knowledge from me. And I've been enjoying that like a little bit more than interacting with like a group of like 20 people. Some people I interact with like exponentially, like every day, all the time. Other people I barely heard a peep out of after months. But honestly, like part of the reason I got rid of the group is I just always had a headache. I was always tired, and I always like felt horrible. And then not because of the group, it was because of the Rona. But I felt bad continuing the group, and people were like spending less time interacting and participating because of my lack of participation and regular video updates and trade setups. But also, like, I felt like people were specifically only wanting, people didn't want to learn. It seemed like they wanted me to put like trades so they could just copy my trades. And to me, that's like a cop out, because I'm trying to teach people how to fish. I'm not trying to like go fishing and just give you fish. I don't need people's money. I enjoy their contributions because it reciprocates the value that I provide to them. But the idea is to teach other people how to do this, not to just let people copy my trades. Yeah, I've had quite a few people that are on like quote unquote the waiting list for the group, and I will restart it again soon, and it won't be too long from now, and I'll probably do it through Discord and Patreon just for convenience. Maybe I'll have like two tier levels on Patreon. One cheap one for people that want like the minimum, um, but still want some interaction. And then one like what I had before, like a premium Patreon. But ideally, I'd like to film like the actual course for people that don't care about the interactions, but want like a course that just lays everything out, high quality interactions that teaches you exactly my trading strategy, lays out like my basic like trade journal and how to keep a trade journal, how to use like risk reward, how to use all my indicator oscillators, and like I don't want it to be so excessive that it's like 200 hours and people take forever to try to learn it, but I want people to feel like they get their value out of it. And I would probably set the price point as like a one-time purchase of like, $250. You buy the course, you learn everything, and you got everything you need, and you never have to talk to me again or watch my channel again. And, you can go back and watch it as many times as you want and, basically be self-sufficient. Or, you can participate, permanent access to the Discord group and, the private Discord and everything. No, you don't have to be part of like the Patreon and pay regularly if you purchase the course. But of course, for the added benefits, you could be part of that as well. And again, it's really just about like the community reciprocating me for the additional time I put into it. But I really do enjoy the live streams also. Neo is like $40. People calling for $50 Cardano are going to get wrecked. Yeah, same as last time when they were calling for, XRP to the moon and Cardano to the moon. And next thing you know, like Charles like squats down over your head and you're in the Cardano cult and he just dumps all over your face. And you're part of the two Cardanos, one mouth video or whatever. Yeah. Yeah, exactly. Yeah, the Cardano $50 Cardano people are just the $589 XRP people who gave up. They just moved from one call to the other, drinking that Kool-Aid, and one day they're gonna die of malnourishment. Yeah, for sure, man. Hit me up. Yeah, exactly, man. Mods and admins, and that was the idea, was to have people in like the group long enough that basically they could just participate forever for free and like mod and admin, because I was like honestly getting pissed off by group members, and I had to kick, I like had 20 something people in the group at once, and I was having to like kick people off and regulate grown men like they were children. I had to deal with like racism. Like I don't want to deal with that shit. I don't have time for it, and I really don't care. I wasn't charging enough to deal with that. Yeah, for sure, man. Hit me up, definitely. And I'll keep you on the list, and it won't be long, man. Record the one-on-ones. Yeah, the only problem with that is, man, it's tough because it's like, you know, if somebody's paying for that specifically, it's almost not fair to them if I provide that to other people because they've paid specifically for that service. Yeah, one night a week lesson, or I'll turn the lesson into basically like, I'd rather do it as like statics and have a course and it's like a 10-part course. People can pay for it once and then get that course. And then afterwards, you can ask me like questions in Discord. Because a lot of the time in Discord, I felt like people were just asking me the same questions over and over again. And I'm just like, dude, are you watching the videos? Like, all these questions have been answered 50 times in the videos. You're just being lazy, like asking me the questions. And then every time somebody new joins the group, they ask me the same questions over and over again. And then I'm like, look, why aren't the people in the group answering these questions for each other? And don't get me wrong, a couple people were, but overall it was just like, damn, y'all, like, don't be lazy, man. Watch the videos. Yeah, I know a lot of people like the idea of the course. And if I set it as like a one-time thing too, and then you're grandfathered in permanently to like the Discord without having to do a regular Patreon, I think it's better for people overall. And then when I put out like an advanced course in the future, you can buy into that if you want, or you can just stick with what you got. I mean, every video I make is packed full of like learning information designed specifically to do up-to-date, relevant technical analysis, but also to teach. So yeah, yeah. I have been selling the one-on-ones, but again, that's a lot of time. And I have been restricting that to literally I'm doing like a couple people right now. So once I'm done with like one of them, or once I decide to dedicate a little more time, I would open it up to like one more person. But I do charge a premium for those, and it's much more beneficial, I think, to the community if I'm making like a course where a bunch of people can benefit from it, rather than having one like high roller paying to just use me, but then not able to like give that to others. So again, man, it's for me, it's more about like working with the community, but also reciprocating like the cost benefit analysis for like the amount of time to like what I'm offering. So, and I've never really monetized anything like this. Like, it's weird monetizing teaching because there's so many different ways to do it, but there's also a ton of work that goes into like a course prior to the actual like monetization of it. And I don't want it to take away from the actual channel itself. Because for me, like, I'm all about like the growth and everything of the channel. I'm all about interacting with people specifically. And then obviously, like, I make my money trading. I haven't worked like a regular job in years. Like, I'm completely self-sufficient. I don't have debt. I'm profitable. Like, I don't need any of this. I do enjoy it though, 100%. And again, it's, for me, it's like a potential like laying groundwork of a business. I've been laying the foundation of this channel and of a profitable company, crypto trend trading, or whatever I end up like finalizing the name of it to, or whatever, eventually will be like beneficial to me like financially. But right now, it's beneficial because I'm laying the groundwork. I get to go back and look at my own technical analysis, my own videos. People get to learn, and I get credibility as people see I'm right. I'm building a community. Like, there's a ton of groundwork going into it right now, but it'll all develop here in time. I mean, it's only been a little over a year, so what do I think about the ETFs? Is that what you're saying? About ETF? Yeah, I mean, I think the ETFs are going to kill stuff like Grayscale and MicroStrategy because all they are is like ETFs are the premium. Once you can use an ETF, there's no reason to pay a premium. So I think that in time they'll be great. Right now, they're Canadian, so it's a little harder to get depending on what exchange you use or what brokerage you use or whatever. But I think ETFs are the future, honestly. But just because an ETF comes out doesn't mean that people aren't going to be shorting the shit out of Bitcoin. It's not going to get crushed and go into 4-year cycle bear markets. Is he bearish? I'm not sure who you mean. Am I bearish? I'm macro bullish on Bitcoin, but right now it looks like we're going into a prolonged consolidation or retracement period. So, all right, well, I'm going to take a drink and get back into our analysis. I still have to look at Alibaba, Zoom, PayPal, Apple, Pinterest, semiconductor ETF. And then I was going to take a look at Walmart actually coming up on like Easter and, everything. And then I was going to look at Kathy's funds and poke a little fun at her after my little video earlier, just kind of like busting her chops. And we'll look at the ARC ETFs. So I'm going to take a 2-minute break and run to the bathroom, and then we'll jump back into the technical analysis. Excuse me. All right, let's jump back into it. We'll give everybody a second to get back here. All right, so I did notice we are we're about 2 hours and 45 minutes in, so we'll probably go another like 20 or 30 minutes, and then I'll call it. There are more people currently watching the video than there are likes, though, so you guys better click like on the video. Also, I noticed that I'm assuming that the disliker is some creepy weirdo masochist that watches all my videos but has some kind of personal vendetta against me. So I expect at least the rest of you to hit the like button, while that one like masochistic weirdo dislikes my videos but still watches every day. And that's okay. That's okay that you're strangely obsessed with me. I don't care. But I mean, it's not healthy though, I don't think, for you to participate and watch my videos all the time and dislike them, because you either like me or you don't. You either like my analysis or you don't. But that's okay. It's okay if you want to be a creepy, weird internet stalker. Or you have some like strange heterosexual or homosexual tendencies. That's okay. I'm not here to judge you. Yeah, I mean, it could crash, man. We got the end of the month coming up, end of the quarter, 1 year anniversary of the capitulation event. There's a lot of things, futures expirations. There's a lot of things that could potentially lead to a massive, massive sell-off, crash, like whatever you want to call it. So this is definitely the time to be protecting your principal, and being real careful in these markets, in my opinion, because you know, a lot of people are at that over 1 year mark or coming up on that 1 year mark when they're going to de-risk from these markets. So y'all tripping this is a bear trap? Maybe, dude. Let's not get too excited just yet. I mean, are you sure it's a bear trap? Or I mean, what's the definition of a bear trap? You're going to catch all the bears? Well, you know, most of the bears are already up like 20% on their short positions, and probably, like, you know, if you didn't watch the beginning of the video, you know, what's the bear trap really? I mean, if we sell back down to the 21 exponential moving average on Bitcoin, if we go down to like $38,000 to $42,000, like, who got trapped? The bulls that rode the price action from 60,000 to 38,000, or the bears that get trapped shorting at, you know, 40,000? Or like, I mean, it depends how you look at it, man. It's all like, right, like perspective, like hindsight, whatever. Do I think we're going to stay in this bull run for longer? Yes, I think we're in a 4 year cycle and we're going higher. But, you know, is it a bear trap if it goes down to $38,000, or did the bulls get wrecked? I think probably anybody with like 2x leverage or more is going to get liquidated, and probably people will like lose tons and tons of wealth because they didn't lock in their profits. And then it's, again, people will get bearish at the bottom the same way they get bullish at the top. You know, I told people when we fell short the first time at like 58,000, just below the Fibonacci extension target, that we were going to push back up. Everybody real bullish at the top, real bearish at the bottom. Like, that's why it's all about like swinging and scalping and stuff. So, but anyway, I'm going to jump back into, yeah, those options are going to be huge. Yeah, we'll see what happens. I mean, look, man, I'm a trader. I do what the technicals say. Um, you know, I try to leave my personal opinion to the sidelines when it comes to my financials, but I'm usually right. So we finished up on Alibaba. We're going to jump back in on Zoom now. Zoom is doing exactly what I said. We have been operating inside of this channel. We have multiple tests on the top of the channel, hard rejection off the top of the channel, multiple tests on the bottom of the channel, and it has been acting as support. We have now broken down below the 200 exponential and simple moving averages. We got rejected multiple times at the 236 Fibonacci extension, or Fibonacci retracement, as well as the dotted green, you know, heart line right here, selling back off, consolidating at the lows. You know, we're going to take out this low. It looks very likely, especially after that bearish engulfing candle, and come back down here. I would expect this channel to just extend out further. And basically we'll stay inside this channel until we don't. We have a massive move to the upside, followed by a retracement channel. I think we're probably going to come back down to the 382 Fibonacci. So I think Zoom's probably going to end up at like 250. still massively bullish on this thing overall, but I don't want to see us underneath this 200 exponential, 200 simple moving average too long, because if this starts rolling over to the downside, it's going to look like we're entering into a bear market on Zoom, and we entered the bull market at like, 80 to, $100, and we've been in it for months. I don't want to see us come down too low, but is the 382 reasonable target and the bottom of the channel way down here at like 250? Yeah, I think that's reasonable. Could it go much lower? Yep. Could we break out to the upside right now? Definitely. But again, I think we'll stay inside the channel until we don't. So PayPal, yeah, again, all these tech stocks are doing the exact same thing. PayPal came down, bullish reflex rally, could not maintain above the 821, rejection, came down to the 236 exactly, reaction rally, lower high, could not get the 821 cross back to the upside, hard rejection, exactly like I said. Everybody's trying to get bullish on PayPal. We're headed down to the 200 exponential and simple moving average. 212 on PayPal, I'll be legitimately considering it as we have all this resistance, flip support, but in all reality, we could easily make it down to the 382, $186. If it goes lower than that, I'll have to start really paying attention to like the macro fib retracements, but I think probably between 186 and 212, I'll start getting pretty bullish on this thing, depending on what price action looks like. Don't want to see it below the 200 exponential, though, obviously. 200 simple. All right, so Apple. Man, this thing in that descending channel, very, very significant. Broke out to the upside. I told you I was extremely skeptical of this gap up breakout. I wanted to see what the gap fill looked like, and could we come back down and find support at the top of the channel. We got that massive bearish engulfing candle back inside the channel, got a hard rejection off the 382 Fibonacci in white right here, and then we broke back out. And exactly what I said was, I was skeptical once again of that breakout to the upside, and now here we got a hard rejection again, followed by another bearish candle. Now, what could happen right here? We could very easily find support now and bottom on this thing and then get that measure move to the upside, at which point in time I'd be looking at 136 for a target. So I think it's very likely that we do find support right here, and this was just a double retest, and we end up somewhere between 133 and 137. So, depending where you want to go, the measure move or whatever, I think that's a very likely target to the upside. Now, when do I start doubting this? If we break back inside this channel and take out that previous low at 116. So, I mean, that's a nice trade right there. Less than 5%. I mean, even if you put this at like a 5.5% below the 200 exponential and simple, 5.5% soft or hard stop loss with a 13.5%, risk reward to the upside. Even if we put in a lower high, you're looking at like 2 or 3 to 1, 2.5 to 1 risk reward ratio on Apple. If it breaks back inside the channel and then gets rejected by the top of the channel, I would expect it to go down here. So I would just close my trade anyway. But if we find support here on the top of the channel and stay outside it long enough, we're going to get a push back up, even to a lower high. I would expect us to get to the 618 or 786 of this like internal retracement. So this looks more bullish than most tech does. But again, I don't want to get overly bullish. It's a lot of violent selling taking place still. Pinterest, again, one of the more bullish. We're still maintaining above the 89. We had a massive front run of the 200 exponential and simple, but couldn't maintain the cross here. It looks like we're getting ready to just roll over. Looks like this thing's going to pour out like a waterfall. I would expect us to bottom out at this key resistance turn support line here at $62, or potentially sell off lower to like $57 or even $50. So looks bearish. We'll have to see what happens though. Play out over the next like few days to a week. But overall looks bearish. VanEck Semiconductors. I'm obviously very bullish on this thing on the macro. Semiconductors are in high demand and there's a massive supply constraint bottleneck going on right now. But, when we put in this high, I said, off of like this bearish divergence taking place, a high right here, lower high right here, higher high right here. Same on the Jewel Thief. Bearish divergence, expected a massive sell-off. Expected an 821 cross to downside. I expect us to bounce the 89, and then I told you we'd see what happens from there. From here, it looks like a rejection of the 821, and I would expect us to sell back off to retest this area of 212 or potentially the exponential 200 or 200 simple. So $200 $195 to $200 looks likely, but we could easily find support at like 211. But let's just see what happens on this one. Walmart. Walmart typically has like bullish move around this time of year with like Easter and everything. And obviously depending what happens with like lockdowns and, you know, every business going out, but Walmart being able to stay open. We sold down below a key support level, lost that level at 133, busted back above it. And we're slightly above that. So we could easily find support right here and move to the upside. We are above the 21, potentially going to cross this back up. But again, we are below the 200 exponential, which has a negative slope. 200 simple still barely has a positive slope, but we're getting ready for a daily death cross on this. So could we easily like bottom out here and continue to the upside to higher prices? Yes, but we could just as easily sell off. If we do sell off, I would expect the 528, like 125 or potentially 117 range. But we really got to see what happens on this one. It is showing quite a bit of strength, but it did that here and then sold off. So we got a high, we got a low, we got a lower high, we got a lower low. We got a lower high, we got a much lower low, and then potentially we could be putting in a lower high here at like 138, followed by another lower low. So this thing could get bearish. We'll have to see what happens. All this stuff is pointing to a massive retracement, technically, on traditional stocks. So, and fundamentally, they look like shit too. So let's check out Queen Kathy, the Queen Bee. Kathy on her knees. Not looking good, exactly like I said. I told you Kathy Wood was going to get crushed. Everybody was extremely like bullish on Kathy and everything. And what did I tell you? What did I tell you before any of this stuff started selling up? I said, ask me about Kathy Wood in a year, 5 years, or 10 years. Because she has been, look at her track record over the last like few years, not the last 1 year. If you look at her over the last 1 year, all of a sudden, everybody loves Kathy Wood. She's the queen. She's the best. She's the Reddit master. It's easy for anybody to be profitable for 1 year in a massive bull run after a 30 to 50% capitulation, or somebody that bets on Tesla, you know, and then it blows up. Let's see what happens to her over time. And again, I think she'll do well over time, but she is getting crushed right now. Her funds are getting crushed right now. All her funds are down between 25 and 33%. And I told you that's exactly what was going to happen. I told you about the most reliable signal on any of my indicators, the TJD TDMACD rejection of the slope line when we're below it. We had right here a high price action, high on the indicator, a lower high here, a higher high on price action, a lower high here, and rejection of the blue slope line, and then finally a higher high on price action. We have daily triple bearish divergence, and since that daily triple bearish divergence, I called out the absolute top, and that is why I am behind Kathy while she is on all fours begging for a break. She is getting absolutely crushed. Her fund is down over 20 to 25%, 33 in some cases. Your boy saw it happen ahead of time. And we have to be careful now because this is what Bitcoin's doing right now. Bitcoin is showing triple bearish divergence on the daily and multiple stabs of bearish divergence on the weekly. So you're real bullish talking about Thursday is going to be the breakout and we're going to the moon. Careful, dude, because this is what tops look like. And now, just like I said, we come back up, got rejected, could not maintain the 821, coming back down to the 200 exponential and simple. If we lose the 200 exponential and simple, if we lose this $100 area on, this is the ARKK ETF innovation. I think it's very likely we're coming down to like $90 or $80. I mean, ARKK is, some of the top holdings in this thing are like Tesla, Roku, Teladoc, Square. How many of these are based on Bitcoin? Baidu, Zillow, Spotify. I mean, this thing could get absolutely crushed. Tech sector is getting crushed. So is it unrealistic to think this thing's coming down for an A, a B, and then a C, massive sell-off right here? No, I think it is. I think it's coming down for, you know, I think it has further downside. You know, from the bottom to the top of the Kathy begging for the wood bubble, you know, we just hit the 236 retracement. That was the 236 at the 200. So the 382 is 88 bucks. The 0.5 is 72 bucks. I mean, how many people are going to love Cathie Wood when her fund's down 45% or when her fund's down 55%? And she starts selling all these things at a loss to offset her gains and make up for some of her taxable gains. Calm down there, Cathie. So there we got ARK. Let's look at ARKF. I'm giving her a little extra attention too because I've been busting her chops so hard. And I made that little song making fun of her earlier in my little update. Which if you didn't watch that, go watch it. It's hilarious. It's like 2 minutes long. It makes fun of a bunch of people too. But don't mind my accent and lack of singing skills. But I do like to have some fun here and there, especially when I'm right. So ARKF, this is the fintech innovation. Again, I'm bullish on these things over time, but I expect them to further get crushed. Again, same thing. No, this one did not have the triple bearish divergence, but was putting in a clear topping pattern, came back up, another hard rejection, and then look at this bearish candle, destruction. It's going to come back down to the lower low, 200 exponential, between like 44 and 45 bucks. I'll be looking for like a potential bounce on this thing. Potential powerful move back to the upside. Throw a Fibonacci on this thing. Again, we perfectly touch a 236. So if we get down to the 382, that's going to be $38. So you think the people who bought at, 60 bucks are going to be happy about 39 bucks? Probably not. Could it make it to the 0.5? I doubt it, but it could easily get down to like 32 bucks. And again, I try not to bust her chops too hard, but all she has is just all the big names, all the tech names, all like the same stuff in all her funds. The innovation one is great. It's great names, but it's like Square, once again, heavily based on Bitcoin. 10 Cent, again, I'm bullish on them overall, but Chinese stock market's been getting crushed. Zillow, once again, what else? Pinterest, which looks like crap. PayPal, directly correlated again to crypto and payment systems. Alibaba, it's like all the same stuff in all her funds. So you're either going to be massive success or get massively crushed. Same as the dude who goes all in on Bitcoin and then, it skyrockets. Of course, he's going to be happy when it's up 500%. But the same dude who was all in at Bitcoin and wrote it down from 20,000 to 3,000, you don't hear shit from him while he's getting absolutely like destroyed in the beehole. ARKG, this is genomic revolution. Again, extremely bullish on this, technically and fundamentally over time, but the actual chart looks like shit. It looks absolutely terrible right now. And again, we've got bearish divergence from this point to this point, massive bearish divergence. Actually we don't from here to here. Oh, from here to here, we had massive bearish divergence from here to here at the absolute top. And then we came back up and basically put in that same high. Oh no, we just have a different form of bearish divergence. We have basically, bearish divergence, 3 stabs basically, selling off. Did the exact same thing, hit the 200 exponential, hit the 200 simple, almost. Tagged the 236, got a dead cat bounce, massive capitulation dump. Same thing, headed down. Gonna get crushed. And same thing, Teladoc, is Teladoc going to get crushed over time? It depends if we have the opening up. Are people going to shift towards that over time? Yeah, I think a lot of these things have like big potential, like long term, but and like the biosciences and Regeneron and, Teladoc, all this stuff has potential long term stuff like CRISPR. Like I believe in it fundamentally and technically, but at the same time, like the charts look like absolute shit right now. So are we going to continue to get crushed? Yeah, probably. Poor Cathie. All right, so ARC W, once again, getting absolutely decimated. Absolutely decimated. from bottom to top, Fibonacci retrace. Oh, look, we tagged the 236 exactly. Front run the 200 exponential and simple slightly. Massive bearish engulfing candle right here. I mean, you could tell there's massive outflows on this fund right now. Poor Kathy's on her knees, tears in her eyes, blood in her nose, begging for a break. It's coming down to the 200 exponential and simple at 125. I think the 382 exponential, 382 moving average, and the 382 of the Fibonacci retracement both come in at $106. So at that point in time, this thing will be down 50%. Could go down to the 0.5 down here at like $87. Very likely. Very likely. Next generation internet. I mean, it's full of all the same shit. It's once again loaded heavy on Tesla, Roku, Teladoc, Square, Grayscale Bitcoin Trust, Tencent, Spotify, Netflix. I mean, are you serious right now? Like, yeah, same thing. And last but not least for today's live stream, I'm going to bust Kathy's last ball here, and we'll take a look at the autonomous technologies and robotics ETF. That's ARKQ. The autonomous technologies chart looks, go figure, exactly the same as every single one of her ETFs. You can see massive outflows. You can see that buying the dip is not a good idea if you're going to have a massive retracement, because all the people that bought the dip are now going to be selling the dip. And when the dip takes a dip and your account goes, almost touch a 236, basically front ran it like slightly front ran the 236, but I expect us to get down here to the 200s, and the 382 again lines up perfectly with the moving average and the previous resistance turn support. I think it's very likely we're coming down here to like $60 from over 100, and it's the same thing. It's loaded with the same stuff. Overall bullish on this stuff, but primarily Tesla, Baidu, Deere. I'm bullish on John Deere, Alphabet. I mean, it's all Taiwan Semiconductors. It's same stuff. Strong overall makeup for all these funds, but too much of the same stuff in my opinion. I don't think you should have a massive position in Tesla and then also have multiple ETFs with over 10% holdings in Tesla and Square and Grayscale, and also have a massive Bitcoin holding. And that's not diversification. You're supposed to have different stuff that's non-correlated. So good try, but overall, gotta bust Kathy's balls. I definitely got mad respect for her though. She's definitely doing some big things for women, but exactly what I said's happening. Let's talk in a year or 2 or 5 or 10, and we'll talk about if she's one of the greatest investors or technical analysts or speculative asset purchasers of all time, because there's tons of people like that have a bunch of time doing analysis or have funds that have never been profitable, and then all of a sudden they have a stellar year and everybody's like hanging on their nuts talking about how great they are, and then after that they just get wrecked every year for the next 20 years after that. Look at people like Peter Schiff, who've been in the gold cult for 20 years, or people that have been wrong for 20 years and then all of a sudden they're right, and now they're like singing to the stars about how great they are. It's like, yeah, even a broken clock's right twice a day. Calm down. So before I get massively bullish on Kathy and apologize, I think let's see how the next couple of years of her fund goes. Let's see how these massive outflows go. Let's see how far down her ETFs capitulate. So but that's it. That's all I had for today. That's the end of it. I'm going to take one more look at chat, and then I'm going to call it. That was a nice over 3-hour stream there. So I appreciate you guys showing up last minute too. I meant to give you more notice, but I did not remember. I already had a commitment for Thursday. So, and I may just do these every Wednesday instead, and then do a morning stream on like a different day or something. We'll see. Catch everybody's feedback and everything. Bunch about the options. Yeah, AC. I agree with you on a lot of that stuff, but let's not get too crazy about how Bitcoin's going to 1 billion and this is a bear trap. Let's look at what the technicals tell us and not our own personal biases. Because I mean, I would love Bitcoin to go to 300,000 tomorrow, but let's be real, man. It'll be 55K in 3 hours. Well, we're 3 hours in, and we are at 52,290. So I don't know, man. And that's a pretty big, thick red candle on the 4 hour. And we got rejected off the 200 exponential moving average on the 4 hour. Uh, yeah, I don't know, man. Let's not get too bullish just yet. I think it's more likely than not probably going to be the weekly retracement I've been telling everybody about. Probably going to be the triple bearish divergence on the daily playing out. Probably going to be the biggest pullback of this entire bull run. So don't get too overly bullish just yet, buddy. I mean, but again, you can do whatever you want. It's not financial advice. Tax and Bitcoin correlated. Yeah, I totally agree, man. Analysis on Neo. We already did Neo. Or are you talking about Neo, the crypto now? Yeah, I gotta agree with you, Supernova. Looking at technicals is much more important than like, just coming in with your fundamentals, talking about how Bitcoin's going to whatever, and this is a huge bear trap. Every pullback is a bear trap until it's not. Every push up is a bull trap until it's not. You know what I mean? So just be careful, man. This is a technical channel, and if you're not sure about technicals or you want to learn, stick around long enough, and you'll understand what we're talking about. And that's why people don't like me. I call it how it is. I'm not going to come in here and fluff you up like Crypto Zombie does. I'm not a fluffer. I'm not gonna come help you get hard, and talk about spaceships and new all-time highs of 100,000, 200,000, 300,000, 1 million, 3 million. I mean, Crypto Zombie was making like, what was his video the other day? $5 million long. He said he was in a $5 million long. What happened since then? Bitcoin capitulated. I don't hear him talking about his long now, but he's still talking about how bullish he is. Why don't you show that trade, bro? Why don't you show your $5 million liquidation, bro? He was in a $5 million long, supposedly, which I don't have any reason not to believe him because I know he uses massive leverage. And he's probably like the biggest influencer in the space, but he was in a $5 million long right here at $58,000. So let's see, what's $5 million minus 10%? So what's he down? He's down $500,000 right now. So if he was using no leverage, he's down 10%. If he was using 5x leverage, he's down 50%. If he was using 10x leverage, he's liquidated. So maybe he is a crypto zombie right now. Dead man walking. Liquidations. We got them margin calls. Hey, who's on the phone there? Oh, it's Margin, and she's asking for you because you just got liquidated. Crypto zombie. Liquidated. You better use those referral links. You better pump that Bitcoin up because Crypto zombie got liquidated. What an idiot. Yeah, we'll see if he shows that loss off. I know he was like showing off a couple like $100,000 gains and stuff. The truth is, man, you don't have to show off gains if you consistently make gains and you're like a good trader and stuff. If anything, you don't want to show off gains because you don't want people to target you for potential things like hacks or home invasions or kidnapping your family because you're a big influencer and everybody knows what your face looks like. But again, that's up to you, man. That's up to you. But I do encourage people like Meet Kevin and Crypto Zombie to do an update video on their positions since they became the mayors of Wrecked City. If you're going to show off your gains, please also show off your pains. Give a realistic representation of what it looks like when you get your b-hole torn open by the BTC, the big, thick candles. Oh, poor Kathy. All right. Man, what do you want to see? Phantom? Man, we're over 3 hours. I was about to jet. Yeah, I could look at Phantom, man. But I really am about to get out of here, so that's the last one. Excuse me. Oh, matter of fact, I think I'm gonna stand up for this one. Give me just one moment while I adjust my desk and stretch my legs, and then I would do Phantom, and then we can get out of here. No, no, I'm about to do it. I'll pull it up. Just give me one sec to stretch my legs. Perfect. Okay, so Phantom, and then we are out of here. Appreciate everybody sticking around. Make sure you hit that like button too. Or if you're some kind of weird masochist, feel free to dislike it as well. Or if you just want to have fun, everybody can smash the dislike button. I really don't care. But I do appreciate all the support and all the people that was tuning in today. Oh yeah, there we go. I see you guys liking. That's what's up. Phantom, I got it up to USD right here. Um, Man, it looks about the same as everything. Put in that high back here in February, and it's just been putting in a series of lower highs. The problem is it's not even putting in like a descending triangle. It's got a low right here, followed by another low, followed by another low. So it's showing quite a bit of weakness. And there's like no support from where it's at. So you've got like some support levels kind of down at like 18 cents, man. But if this thing lets go, it's going to let go hard. It's already sold off. Got the 821 cross on the daily to the downside. If it loses the 50-55, which it looks like it's getting ready to do, it could easily get a pushback up here one more time to like 37 cents. But more likely than not, it looks like it's going to stay in this downtrend until it doesn't. I think 26, 27 cents is probably in the cards. And the 200 exponential is 16 and a half cents or 11 and a half cents. I mean, this thing looks like it could get dominated, dude. If you're not careful, bro, your portfolio could start looking like Kathy Woods over here. You could start looking like Meet Kevin with them mad losses. Let's look at from the bottom back here in March. The 1 year pullback. I mean, we're not even to the 236. The 236 is 21 cents, and that it looks like it's going down to 21 cents, before long. Now, is it possible we find support here and continue on up to the upside? 100%, but it's showing quite a bit of weakness, and I think realistically, like 16 to 21 cents is more likely than an upside target. Now, if we get back on top of the 821, take out the parabolic SARs, we got them in all red right here. Quite a few long parabolic SARs coming in here. If we take those out and start pushing back up, start taking out these previous little like internal swing highs, you could get bullish at least for some kind of like internal higher high retracement, or at least get like a cross on the daily above 65 cents. That would make me like massively bullish for more all-time highs, like blue sky breakout after like a nice consolidation, like descending channel. But realistically, man, you could easily come back to the 382 on this thing. The 382 Fibonacci for the entire move and the 528 exponential moving average are at 8 cents. I mean, this thing could get absolutely decimated. So you can have some buying opportunities, it looks like, in the future on this thing. The question is, like, are you going to quote unquote dollar cost average into a downtrend, or are you going to wait for strength, or are you going to get out of existing positions? Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Appreciate everybody tuning in today. Hopefully we knocked out all the assets for you. If you have future assets you'd like to take a look at, feel free to let me know. Everything still stands and typically stays relevant for days or weeks in the future. If you haven't watched some of my previous videos on the indicators or used some of the indicators, highly recommend it. Keep putting out these static videos and doing regular live streams. Next live stream I have scheduled officially is going to be Sunday night, 8 p.m. EST. So probably from 8 to 10 or 8 to 11. So put that on your schedule and make sure you tune in. Appreciate all the interactions. Appreciate all the love. Good to see some old familiar faces, man. Good to see you guys back. And appreciate everybody that tuned in for today. Crypto Trend Trader. Check you guys on the flip side. And I'm out of here. Thank you. God bless you too, brother. Peace.